Discounted cash flow analysis is a way. A guaranteed investment certificate lets you deposit your money with a bank for a fixed length of time at a set interest rate. Once that term is up, you get your original principal back along with the guaranteed interest you earned, making it a super safe option. Stagflation happens when an economy experiences slow economic growth, high unemployment, and rising prices all at the same time. It is a tricky situation because the usual fixes for inflation can sometimes make unemployment worse. Hey everyone, welcome to the stream. I How does quantitative tightening affect markets? When central banks use quantitative tightening, they pull. Why does inflation matter to investors? Inflation is really important for investors because it gradually erodes the real purchasing power of your money over time. If your portfolio isn't earning returns that outpace the rate of inflation, you're actually losing buying power even if your account balance looks like it. What is financial independence? Financial independence means reaching a point where your investments, savings, or passive income generate enough money to cover. What is a pause in monetary policy? A monetary policy pause happens when a central bank decides. How does budgeting improve financial health? Budgeting gives you a clear picture of where every What is yield chasing? Yield chasing happens when investors flock to assets purely because. What is an annual percentage rate? An annual percentage rate, or APR, measures the total. What is an accumulating ETF? An accumulating ETF automatically reinvests any cash dividends or income generated right. What causes a bank run? A bank run usually triggers when widespread. Why do companies go public? Companies usually go public to raise a. What is pin risk? Pin risk happens when an option. What is a rate cut? A rate cut happens when a. What is tax efficiency? Tax efficiency is basically about structuring. What is enterprise value? Enterprise value gives you a What is a pension? A pension is a retirement plan where an employer sets aside money while you work to provide you with a steady income after. How does the debt avalanche save money? The debt avalanche method targets your What is an apartment REIT? An apartment REIT is a specialized company. What causes crypto prices to rise? Crypto prices mainly go up when demand for a coin increases, while its available supply remains limited. This surge in buying interest is often driven by positive news, tech upgrades, or broader adoption by individuals and institutions. What is one financial rule everyone should know? A really popular one to follow is the 50-30-20 rule, which helps you split your income between needs, wants, and savings. What is dealer gamma? Dealer gamma measures how quickly an option's sensitivity to price changes shifts as the underlying stock moves. It helps market makers figure out how fast they need to adjust their own hedges to stay balanced. What is a yield curve? A yield curve is simply a line graph that compares interest rates on bonds across different time periods, usually showing how short-term and long-term rates stack up against each other. What is a stock? A stock is essentially a tiny slice of ownership in a real business. When you buy one, you become a shareholder and share in the company's future success. is a mortgage down payment? A mortgage down payment is the initial chunk of cash you pay up front when buying a home, which usually ranges from 3 to 20% of the total purchase price. What is an ETF discount? An ETF discount happens when its market price drops slightly below the actual net asset value of the underlying securities it holds. This usually occurs when more people are selling shares on the open market than there is active demand for the fund. What is a total market index? A total market index tracks thousands of different stocks across the entire exchange to give you a broad snapshot of the whole economy's performance. What is the federal funds rate? The federal funds rate is the benchmark interest rate that commercial banks charge each other for overnight loans, which heavily influences borrowing costs everywhere else. What is a grace period? A grace period is a set window of extra time. What is cryptocurrency? Cryptocurrency is a digital currency that uses cryptography for security, making it super tough to counterfeit or spend twice. What causes credit contraction? Credit contraction happens when lenders become much more cautious and tighten their lending standards, making it harder for people and businesses to borrow money. Why does theta matter? Theta measures how fast an option loses its value as time ticks away and gets closer to its expiration date. It is super important for option traders to watch because time decay eats away at those positions every single day. What is fractional reserve banking? Fractional reserve banking is a system where banks keep only a fraction of their total deposits in cash reserve and lend out the rest to generate interest and support economic growth. What is factor investing? Factor investing is a strategy where you target specific drivers of returns, like value or momentum, rather than just buying the whole market. What is smart beta investing? Smart beta investing is a cool strategy that mixes traditional index tracking with active management factors like low volatility or high dividends to try and beat the broader market. What is operating profit? Operating profit is the money a company makes from its core business operations after taking away operating expenses like wages and rent. It shows you how healthy the main business is without factoring in taxes or interest. What is standard deviation? Standard deviation is a statistical measure that tells us how much a dataset's values bounce around from the overall average. In investing, it is a handy way to look at how volatile a particular stock or portfolio has been historically. What is automatic saving? Automatic saving is a handy feature where a set amount of money moves straight from your checking account into your savings every time you get paid, making it super easy to grow your nest egg without even thinking about it. Why sell cash-secured puts? Selling cash-secured puts is a popular strategy because it lets you collect upfront income while potentially getting the chance to buy a stock you like at a discount. How long does it take to build good credit? Building a solid credit history usually takes around 6 months of consistent, on-time payments and smart account management. It definitely requires a little patience, but the long-term payoff is totally worth it. What is dividend reinvestment? Dividend reinvestment is when you automatically use the cash payouts from your stocks to buy even more shares without paying extra fees. It is a fantastic way to compound your growth over time. What causes crypto prices to fall? Crypto prices often drop when selling pressure outweighs buying demand, which can happen due to negative regulatory news, broader economic shifts, or a sudden loss of market confidence. What is tax-deferred investing? Tax-deferred investing lets you put money into special accounts where you do not pay taxes on your investment gains until you actually withdraw the funds in retirement. It is a neat way to let your savings compound faster over time. What is a life cycle fund? A life cycle fund is an investment portfolio that automatically adjusts its asset mix to become more conservative over time as you approach a specific target date. What causes crypto prices to rise? Cryptocurrency values typically climb when more people are buying than selling, which is often driven by positive news, rising adoption, or broader market enthusiasm. What is crypto market capitalization? Crypto market cap is the total dollar value of all the coins in circulation right now, found by multiplying the current price by the total supply. What makes a business profitable? A business becomes profitable when its total sales and incoming revenue are higher than all the operating expenses it takes to run the place. Generating that positive margin is what lets a company thrive and grow. What is tax loss harvesting? Tax loss harvesting is a neat strategy where you sell underperforming investments at a loss to offset your taxable capital gains and lower your overall tax bill. Why is stagflation difficult for investors? Stagflation is extra tricky because high inflation eats away at returns, while a sluggish economy prevents companies from growing their profits. It creates a really tough double whammy where traditional investments struggle to find a safe footing. What is a mega cap company? A mega-cap company is an absolute giant in the business world, usually having a market capitalization of $200 billion or more. These massive firms are typically household names with rock-solid financial footing. What is a fund's assets under management? Assets under management is simply the total market value of all the investments that a financial institution or mutual fund manages for its clients. A higher number usually means the fund is pretty popular and trusted by lots of investors. What is real GDP? Real GDP measures the total economic output of a country adjusted for inflation, showing us the true growth of goods and services over time. What is startup dilution? Startup dilution happens when a new company issues extra shares of stock, which reduces the ownership percentage of existing shareholders. It is a super common way for growing businesses to raise more money from investors. What is bankruptcy? Bankruptcy is a legal process where individuals or businesses that cannot pay their debts can seek relief and restructure their finances or wipe them out entirely. What is a savings rate? Your savings rate is simply the percentage of your take-home pay that you set aside instead of spending. It is a fantastic metric for tracking how well you are building up your nest egg over time. What is risk capacity? Risk capacity is basically how much financial loss your portfolio can handle without ruining your long-term goals. It depends heavily on things like your timeline, income stability, and overall wealth. What investments can hedge against inflation? Tangible assets like real estate, commodities, and treasury inflation-protected securities are wonderful choices because they tend to hold their value when prices rise. What is a growth stock? A growth stock is a share in a company that is expected to grow at an above-average rate compared to the rest of the market. These businesses usually reinvest their profits into expansion rather than paying out big dividends. How does quantitative easing affect markets? Quantitative easing is when central banks inject money into the economy by buying securities, which helps lower interest rates and boost lending. It typically pumps up asset prices across the board since there is more cash flowing through the financial system. What is a financial sector ETF? A financial sector ETF is a basket of investments focused purely on banks, insurance companies, and other monetary institutions. It lets you spread your money across the whole industry all at once. How is a credit union different from a bank? Credit unions are member-owned, non-profit organizations that usually offer better loan rates and lower fees, whereas banks are for-profit corporations open to everyone. Both keep your cash secure, but the member-focused vibe makes credit unions pretty special. How do covered call ETFs generate income? Covered call ETFs generate income by holding a basket of stocks and selling call options on those same shares to collect option premiums. It is a neat strategy to boost cash flow, though it can cap your potential gains if the market rallies hard. What is a rainy day fund? A rainy day fund is a stash of cash you set aside specifically for unexpected expenses, like sudden car repairs or medical bills, so you don't have to stress. Why do lenders care about debt-to-income ratio? Lenders check your debt-to-income ratio to see how much of your monthly income already goes toward paying off existing loans. It helps them figure out if you can comfortably handle making payments on a brand new loan without getting overwhelmed. How long can negative credit information remain? Negative marks like late payments generally stick around on your credit report for about 7 years. Bankruptcies can linger even longer, usually staying for up to 10 years depending on the specific filing type. What is a bear call spread? A bear call spread is an option strategy where you sell a call option at a lower strike price and buy another call option at a higher strike price to limit your potential losses. Traders use this approach when they expect the price of the underlying asset to drop or stay relatively flat. What is investing? Investing is the act of putting your money into assets like stocks, bonds, or real estate with the goal of growing your wealth over time. It lets your savings potentially outpace inflation so you can reach your long-term financial dreams. What are the stages of the business cycle? The business cycle moves through four main phases: expansion, peak, contraction, and trough. These stages capture the natural ups and downs of economic activity over time. What is maintenance margin? Maintenance margin is the minimum equity you need to keep in your brokerage account after buying securities on margin. If your account value drops below that specific threshold, your broker will issue a margin call asking for more funds. Can credit card companies lower interest rates? Yes, card issuers can definitely reduce your annual percentage rate if you simply call and ask. Having a solid track record of timely payments makes them much more likely to say yes. What is a crypto bull market? A crypto bull market is a period where digital asset prices surge consistently and investor optimism runs super high. Everyone gets really excited watching the market climb. What is inflation risk? Inflation risk is the danger that the purchasing power of your money will drop over time as the prices of goods and services rise. It means your cash might buy you less in the future than it does right now. What is liquidity risk? Liquidity risk happens when you need cash quickly, but find it tough to sell an asset fast without taking a big price cut. It is definitely something to keep in mind when picking where to park your money. What is a rainy day fund? A rainy day fund is money you set aside specifically to cover unexpected expenses, like sudden car repairs or medical bills. Having that cash ready gives you great peace of mind. What is economics? Economics is basically the study of how society chooses to allocate scarce resources to satisfy unlimited wants and needs. It looks at how people, businesses, and governments make choices about production and consumption. What is dealer gamma? Dealer gamma measures how fast an option's delta changes when the underlying stock price shifts. It helps market makers figure out how quickly they need to adjust their hedges to stay neutral. What is net operating income? Net operating income is basically all the revenue a property brings in minus its essential operating expenses. Real estate investors use it to figure out how profitable a building is before factoring in mortgage payments. How do banks make money? Banks primarily earn money by charging a higher interest rate on loans they give out than the interest they pay to depositors on their savings accounts. They also generate revenue through various service fees and account charges. What is the federal funds rate? The federal funds rate is the specific interest rate that commercial banks charge each other for overnight loans. It plays a huge role because it influences all sorts of consumer borrowing costs like mortgages and credit cards. Why do companies cut dividends? Businesses usually lower their dividend payouts when they face a cash crunch or want to save money for future growth. It is definitely a tough choice for management, but keeping cash reserves safe sometimes has to come first. How does Bitcoin mining work? Bitcoin mining uses powerful computers to solve complex math puzzles that verify transactions on the blockchain. Once solved, those miners earn brand new Bitcoin as a sweet reward. What is the biggest investing mistake? Putting all your eggs in one basket is a super common trap. Spreading your investments around helps protect your hard-earned money if one specific company takes a sudden dive. Why would someone buy a put? An investor usually buys a put option when they expect the underlying stock price to drop. It gives them the right to sell shares at a set price, acting like insurance against a market downturn. What is dividend capture? Dividend capture is a short-term trading strategy where someone buys a stock right before its payout date to grab the dividend, and then sells it shortly after. It sounds easy, but the stock price usually drops by about the dividend amount right on the ex-dividend date. What is market cap weighting? Market cap weighting is an indexing method where companies with a larger total market value make up a bigger portion of the fund. That means giants like Apple or Microsoft have way more influence on the index's overall movement than smaller firms. How can someone reduce unnecessary expenses? Cutting down on wasteful spending starts with reviewing your recent bank statements to spot things you rarely use, like unused subscriptions or frequent dining out. Once you identify those leaks, setting up a monthly spending limit can really help you stay on track. What is a microcap stock? Microcap stocks are shares of tiny publicly traded companies with a very small overall market value. They can offer huge growth potential, but they also come with much higher risks and price swings. What is ROE? ROE measures how much an option's price changes when interest rates shift up or down. It is typically more important for long-term options since shorter-term contracts barely feel the impact of rate movements. What is hyperinflation? Hyperinflation happens when a country experiences extremely rapid and out-of-control price increases, causing its currency to lose almost all of its purchasing power. It is usually triggered by a massive surge in the money supply without enough economic growth to back it up. What is residential real estate? Residential real estate refers to properties built specifically for people to live in, like single-family homes, townhouses, and apartment buildings. It is a super popular asset type because everyone always needs a place to call home. What is intrinsic value? Intrinsic value is the true, calculated worth of an asset based on its actual fundamentals, rather than just its current market price. Investors try to find this number to see if a company is currently a bargain or overpriced. What is tax-deferred investing? Tax-deferred investing lets you put money away for the future before taxes are taken out, meaning your funds grow faster since you only pay taxes when you eventually withdraw them. What is sequence of returns risk? Sequence of returns risk is the danger of hitting a market downturn right when you start withdrawing money from your retirement accounts. If your portfolio drops early on, it can seriously hurt how long your savings will actually last. What happens when someone defaults on a loan? When someone defaults on a loan, it means they have failed to make the required payments for a long time. Lenders can then take legal action, which really hurts the borrower's credit score and can lead to losing collateral like a car or home. What is a central bank balance sheet? A central bank's balance sheet is a detailed record of all its assets, like government bonds and foreign currency, and its liabilities, such as commercial bank reserves and currency in circulation. It gives us a really good look at how money is managed in the entire economy. What are company assets? Company assets are all the valuable things a business owns, such as cash, inventory, equipment, and property. These resources help the business run smoothly and generate future revenue. What is the opportunity cost of saving cash? The opportunity cost of keeping your money in cash is missing out on potential gains you could have made if that cash were invested in assets like stocks or bonds. Plus, inflation slowly eats away at the purchasing power of uninvested money over time. Can you be too diversified? Definitely, spreading your investments too thin can. Why is EPS important? Earnings per share tells us how much profit a company makes for each share of its stock. It is a fantastic metric because it shows how profitable a business is on a per share basis. What is the biggest investing mistake? One of the biggest blunders is letting emotions drive your choices, like panic selling during a sudden market drop, instead of sticking to your long-term plan. How many stocks should a portfolio hold? Having around 20 to 30 individual stocks across different industries is usually a sweet spot for getting good diversification without spreading yourself too thin. What does timing the market mean? Timing the market is the tricky attempt to predict future price movements by buying low and selling high. Most people find it nearly impossible to do consistently because nobody can truly foresee where the market is heading next. What is an employer match? An employer match is an awesome workplace perk where your company puts extra money into your retirement account based on how much you contribute. It is basically free money, so it is always smart to pitch in enough to grab the full amount. What is delayed gratification? Delayed gratification is the practice of resisting an immediate reward now so you can enjoy an even bigger benefit later on. It is a super powerful mindset for building long-term wealth and reaching your big financial goals. What is a cash advance? A cash advance lets you borrow money quickly using your credit card, but it usually comes with super high fees and interest rates that start piling up right away. What is a cash flow statement? A cash flow statement is a handy financial report that breaks down all the cash coming into and going out of a business over a specific period. It is super helpful for seeing if a company actually has enough liquid cash on hand to pay its bills and keep things running smoothly. What is real estate depreciation? Real estate depreciation is a handy tax deduction that lets property owners write off the cost of wear and tear on a building over time. It is a great way for investors to lower their taxable income while owning physical property. What is a leveraged ETF? A leveraged ETF uses financial derivatives and debt to amplify the daily returns of an underlying index. While it can boost potential gains, it also increases your risk of major losses just as quickly. Why does implied volatility rise before earnings? Implied volatility climbs ahead of an earnings report because investors expect a massive price swing once the new numbers drop. Market makers hike options prices to reflect this upcoming uncertainty and potential for sudden movement. How can you improve your credit score? Paying your bills on time every month and keeping your credit card balances low are two of the absolute best ways to boost your score. Staying consistent with those good habits makes a huge difference over time. What is Sharpe ratio? The Sharpe ratio is a helpful metric used by investors to measure how much excess return you are getting for the extra volatility you take on. Basically, it helps you figure out if an investment's stellar performance is thanks to brilliant moves or just reckless risk-taking. What is an inverted yield curve? An inverted yield curve happens when short-term bonds pay higher interest than long-term ones. It is often watched closely because folks view it as a classic warning sign for an upcoming economic downturn. What is goodwill? Goodwill is an intangible asset that pops up on a balance sheet when a company buys another business for more than its net identifiable assets are worth. It usually represents cool perks like brand reputation, loyal customers, and proprietary tech. Should retirees own stocks? Owning stocks in retirement can actually be a great strategy to help your savings outlast inflation. Most financial folks suggest keeping a balanced mix so you have steady income while still growing your wealth. How does volatility affect option prices? When volatility goes up, options become much more expensive because there is a higher chance of the stock making a big move. Sellers demand a bigger premium to take on that extra uncertainty. What is a zero-based budget? A zero-based budget requires you to assign every single dollar of your income to a specific category, until your total income minus expenses equals exactly zero. It is a fantastic method to ensure nothing slips through the cracks and every dollar works hard for you. What is a mutual fund? A mutual fund pools money from many investors to purchase a big basket of different stocks or bonds. It is a super easy way to instantly diversify your portfolio without having to pick individual companies yourself. Why do longer loans cost more? Longer loans usually carry higher interest rates because lenders are taking on a lot more risk over an extended period. With more time left on the clock, a lot can change in the economy, so lenders charge extra to make up for that uncertainty. What causes crypto prices to rise? Cryptocurrency prices mostly climb when demand outpaces available supply, often fueled by positive news, wider adoption, or exciting new tech developments. When more people want to buy in than sell, that upward pressure sends the value soaring. What is the options chain? An options chain is basically a complete list of all available call and put contracts for a specific stock, showing expiration dates and strike prices all in one spot. What is the bid price for an option? The bid price is the highest amount that a buyer is currently willing to pay for that specific option contract. It is the immediate price you would receive if you decided to sell your contract right then and there. How can you improve your debt-to-income ratio? You can boost your debt-to-income ratio by either paying down your current balances or finding ways to increase your monthly earnings. Lowering that percentage shows lenders you can comfortably manage your financial obligations. What is a buy now pay later service? A buy now pay later service lets you split your purchase into smaller, equal installments, usually without any upfront interest. It is super popular for online shopping, but you just have to watch out for missed payment fees. How does debt affect net worth? Debt directly lowers your net worth because your overall worth is calculated by subtracting what you owe from everything you own. Paying down those balances helps build up your total wealth over time. What is an economic indicator? An economic indicator is a specific statistic about economic activity, like inflation or employment rates, that helps us gauge the overall health of the economy. How long do bull markets usually last? Bull markets tend to stick around for quite a while, often lasting several years on average. They are basically periods where optimism rules and stock prices steadily climb higher. What is an ETF? An ETF, or exchange-traded fund, is basically a basket of different securities that you can trade throughout the day just like a regular stock. It is a fantastic way to instantly diversify your holdings without needing to purchase every single asset individually. What is crypto liquidity? Crypto liquidity refers to how easily a digital coin can be bought or sold in the market without causing a major shift in its price. High liquidity means plenty of active buyers and sellers, making trades super smooth. Can investors consistently time the market? Timing the market consistently is nearly impossible even for seasoned professionals, since it requires guessing both the absolute bottom and peak. Most folks find far more success by sticking to a long-term plan rather than trying to predict every twist and turn. Why is liquidity important? Liquidity matters because it lets you quickly turn your assets into cash whenever you need to without taking a huge hit on the price. It gives you the flexibility to make moves fast. What is a smart contract? A smart contract is a self-executing program stored on a blockchain that automatically carries out transactions when certain preset conditions are met. It is super neat because it removes the need for intermediaries. What is a 60/40 portfolio? A 60/40 portfolio is a classic investment strategy split between 60% stocks for growth and 40% bonds for stability. It is a super popular way to balance potential returns with steady income. What is gross margin? Gross margin is the percentage of total revenue that a company keeps after covering the direct costs associated with producing its goods. What is goodwill? Goodwill is an intangible asset that pops up on a balance sheet when a company acquires another business for a price higher than the net value of its identifiable assets. It basically represents things like brand reputation, customer loyalty, and proprietary technology. Why do people overspend? People often overspend because of lifestyle inflation, emotional triggers like stress, or just losing track of daily impulse buys. Sticking to a solid plan really helps keep those habits in check. What is a mutual fund? A mutual fund pools money from many investors to buy a big mix of assets like stocks and bonds, giving you instant diversification with professional management. What is capital appreciation? Capital appreciation simply means an increase in the market value of an asset like a stock or piece of real estate over time. It is basically the profit you make when you sell something for a higher price than what you originally paid for it. What is venture capital? Venture capital is private funding provided by investors to early-stage startup companies that have high growth potential. It is a fantastic way for new businesses to get the resources they need to scale up quickly. How much does someone need for fire? The FIRE movement usually relies on the 25 times rule, meaning you need about 25 times your annual living expenses saved up to retire early safely. Why does inflation matter to investors? Inflation matters because it slowly eats away at your purchasing power, meaning your money buys less over time. To stay ahead, investors look for assets that can outpace rising costs and protect their long-term wealth. What happens when someone defaults on a loan? When someone defaults on a loan, it means they have failed to make the required payments for a specific period. This usually results in severe credit score damage and potential legal action from the lender. Why does theta matter? Theta measures how much an option's price declines as time passes and it gets closer to expiration. It is basically the speed at which time decay eats away at the value of that contract. What is a certificate of deposit? A certificate of deposit is a savings account that holds a fixed amount of money for a set period, offering a higher interest rate in exchange for leaving your funds untouched. What does EBITDA measure? EBITDA measures a company's overall financial performance by looking at its earnings before interest, taxes, depreciation, and amortization are subtracted. It gives us a clearer picture of pure operational profitability without the noise of financing and accounting decisions. How do banks make money? Banks mainly make money by charging a higher interest rate on the loans they give out than the interest they pay to people who save money with them. They also earn extra cash by charging various account fees and service charges. What is fund turnover? Fund turnover measures how frequently a portfolio manager buys and sells securities within a fund. A higher rate usually means more trading activity, which can lead to increased transaction costs and potential tax impacts. What is a momentum stock? A momentum stock is a company whose share price is rapidly climbing because of strong public interest and heavy trading volume. Investors love jumping into these to ride the wave while the upward trend lasts. What is a sinking fund? A sinking fund is a separate account where you regularly set aside money to pay off a future debt or large planned expense. It is a super smart way to prepare for big costs without scrambling at the last minute. What is business cash flow? Business cash flow tracks the total money flowing in and out of a company during a specific time frame. It ensures the business has enough liquid cash to pay bills and keep operations running smoothly. What is financial leverage? Financial leverage simply means using borrowed money to boost your potential investment returns. It can really amplify your gains, but it also increases your risk if things don't go as planned. What is an options assignment? An options assignment happens when a buyer decides to exercise their contract, forcing the seller to fulfill the agreed upon trade. It is a key part of how options work once they are put into action. What is a DAO? A decentralized autonomous organization is a community-led entity managed by smart contracts on a blockchain rather than a traditional centralized leadership team. Every member gets a voice to vote on proposals and steer the project together. What is accounts receivable? Accounts receivable represents the money that customers owe a business for products or services they have already received on credit. It is counted as an asset because the company expects to collect that cash in the near future. What is a crypto wallet? A crypto wallet is a digital tool that securely stores your public and private keys, allowing you to safely send, receive, and manage your digital assets on the blockchain. How does quantitative easing affect markets? Quantitative easing is when a central bank buys up bonds to pump money into the economy and lower borrowing costs. It usually gives asset prices a nice boost, but it can also spark inflation concerns down the road. What are alternative investments? Alternative investments are non-traditional asset classes like real estate, private equity, or commodities that move differently than standard stocks and bonds. They are a cool way to diversify a portfolio beyond the usual market mix. What makes a rental property profitable? A rental property brings in profit when the monthly income from tenant rent comfortably covers your mortgage, maintenance costs, and taxes. Keeping vacancies low and managing repair expenses wisely are the real keys to staying in the green. Why do central banks lower interest rates? Central banks lower interest rates to make borrowing cheaper, which encourages businesses and consumers to spend and invest more. This extra liquidity helps stimulate economic growth during slower periods. Can a great company be a bad investment? Definitely. Even the most successful business can turn out to be a poor investment if you pay too high of a price for its shares. What is private equity? Private equity involves investing funds directly into private companies or acquiring public ones to take them private. The goal is to help those businesses grow and improve their value before eventually selling them for a profit. What factors affect credit scores? Your credit score is shaped by things like your payment history, how much total debt you are carrying, and the length of your credit history. Keeping those balances low and paying on time every month really helps keep that score looking healthy. What is a passively managed fund? A passively managed fund simply tracks a market index instead of trying to beat it, which usually means much lower fees for investors. It is a fantastic hands-off strategy for long-term growth. Is it better to pay off a mortgage early? Paying off your mortgage early can save you a ton on total interest, but you might earn more by investing that spare cash elsewhere instead. What is an ETF discount? An ETF discount happens when its market price drops slightly below the actual net value of all the underlying assets it holds. It is just a quirky little feature of how exchange-traded funds trade throughout the day. What is working capital? Working capital is the cash and short-term assets a company has left over after paying its immediate bills and debts. It is basically the financial cushion that keeps day-to-day operations running smoothly. What is a bank's provision for credit losses? A bank's provision for credit losses is money set aside to cover loans that borrowers might not be able to pay back. It helps protect the institution from unexpected financial hits when times get tough. Why do companies pay dividends? Companies share dividends to reward their shareholders with a regular slice of the profits, which makes holding onto their stock even more attractive. It is basically a nice way of saying thank you for believing in the business. What is a centralized exchange? A centralized exchange is a platform that acts as a middleman to help people buy and trade digital assets securely. It holds the funds for you, making transactions super fast and straightforward. What is depreciation? Depreciation is just the way we measure how physical assets like machinery or vehicles lose value over time as they get older and used up. Which is Vega measure? Vega measures how much an options price is expected to change when there is a shift in market volatility. It is a super handy tool for traders wanting to understand the impact of price swings. Why do companies cut dividends? Businesses usually reduce their dividend payouts when they need to preserve cash during a downturn or fund new growth projects. It is a tough choice, but it helps protect the long-term health of the company. How does demand affect prices? When demand for an item goes up while supply stays the same, sellers can usually charge more for it because so many people want to buy it. It is just basic economics at work in our everyday shopping. What is unusual options activity? Unusual options activity happens when there is a sudden spike in trading volume for a specific contract compared to its usual daily average. Traders watch for this closely because it often hints that big investors are making major moves based on upcoming news. What is a hostile takeover? hostile takeover happens when an outside company tries to acquire another firm against the wishes of its current board of directors. They usually do this by buying up a massive amount of shares directly from public investors to force the deal through. What is economic growth? Economic growth is basically an increase in the production of goods and services in an economy over a specific period. It usually means people are earning more and businesses are expanding. How do you calculate net worth? To figure out your net worth, you just add up everything you own like savings and property, and then subtract all your debts and liabilities. It gives you a clear snapshot of your overall financial health. Can investors consistently time the market? Trying to consistently time the market is extremely difficult even for seasoned professionals, because future price movements are so unpredictable. Most experts suggest sticking to a long-term strategy, rather than trying to guess the absolute best moments to buy and sell. What is initial margin? Initial margin is simply the minimum amount of cash or collateral you need to deposit with your broker before you can borrow money to buy securities on leverage. What is a bank? A bank is a financial institution where you can safely store your money, take out loans, and open checking or savings accounts. It is basically a secure hub for managing all your day-to-day finances. What is a core portfolio? A core portfolio forms the solid foundation of your investments by holding safe, broad market assets like index funds. You build risky or specialized plays around this stable base to keep your overall strategy balanced. What is a distributing ETF? A distributing ETF automatically pays out all the dividends and interest earned from its underlying holdings directly to your brokerage account. It is a fantastic option if you prefer receiving regular cash flow rather than having your earnings reinvested automatically. What is contrarian investing? Contrarian investing is an approach where you buy assets that are currently out of favor with the general public and sell when they become popular again. It takes a lot of patience to go against the crowd, but many find great value in it. What is a diagonal spread? A diagonal spread is an options strategy where you buy and sell two options with different strike prices and different expiration dates. It lets traders capture value from both time decay and directional price movements at the same time. Why is cash flow important? Cash flow is super important because it ensures you have enough actual money on hand to pay your bills and handle emergencies without getting stressed. Having a positive cash flow also gives you the freedom to save and invest for your future goals. What is a short-term financial goal? A short-term financial goal is a money target you want to hit soon, usually within a year, like saving up for a fun vacation or building an emergency fund. It is a great way to stay motivated while tackling your immediate needs. What is a bear put spread? A bear put spread is an option strategy where you buy a put option at a higher strike price and sell another put option at a lower strike price to limit both your potential costs and maximum gains. It is usually used when you expect a modest drop in the price of the underlying asset. What is a life cycle fund? A life cycle fund is an investment portfolio that automatically adjusts its asset mix to become more conservative as you grow older. It is designed to take on more risk when you are young and gradually protect your wealth as you approach retirement age. What is a stock exchange? A stock exchange is essentially an organized marketplace where buyers and sellers come together to trade shares of publicly held companies. Think of it as a bustling central hub that makes buying and selling investments fast, safe, and transparent. What is bankruptcy? Bankruptcy is a legal proceeding that helps individuals or businesses eliminate or restructure their overwhelming debts when they cannot pay them back. It provides a structured way to get a fresh financial start. How do banks determine credit limits? Banks figure out your credit limit by reviewing your income, existing debts, and overall credit history to see how much they can safely lend you. They want to make sure you can comfortably handle repayment without stretching your finances too thin. Why do banks pay interest on deposits? Banks pay interest on deposits because they use that money to fund loans and mortgages for other customers. In exchange for letting them use your funds, they share a portion of the earnings right back with you. What is an NFT? An NFT, or non-fungible token, is a unique digital asset verified on a blockchain that represents ownership of items like art or music. Because each token is entirely unique, they cannot be exchanged on a one-to-one basis like regular currency. What is a defined contribution pension? A defined contribution pension is a retirement plan where you and sometimes your employer put a set amount of money into an account regularly. The final retirement payout depends entirely on how well the chosen investments grow over time. What is a bank run? A bank run happens when a huge crowd of panicked depositors suddenly rush to withdraw all their money at the same time because they fear the institution is about to fail. Since banks keep only a fraction of their deposits in cash, this unexpected rush can quickly drain their reserves. How much does someone need for fire? The FIRE movement usually suggests saving about 25 times your annual expenses to achieve financial independence. That way, you can safely withdraw 4% each year without running out of funds. What is an iron butterfly? An iron butterfly is an advanced options trading strategy that combines a put spread and a call spread to profit when the underlying asset stays in a tight price range. It limits both your potential risk and your maximum reward. What is dividend growth? Dividend growth is a strategy where companies steadily increase the cash payouts they give to shareholders over the years. It is a fantastic way to build a reliable stream of passive income. How does buy now pay later affect credit? Buy now pay later services can impact your credit score depending on whether the provider reports your payment history to credit bureaus. Missing payments can seriously hurt your score, while on-time payments might help build it up. What is the Russell 2000? The Russell 2000 is a stock market index that tracks 2,000 smaller companies in the United States. It gives investors a great way to see how smaller businesses are performing overall. What is economic overheating? Economic overheating happens when an economy grows way too fast, causing high demand that pushes prices up and leads to inflation. What is an emergency fund? An emergency fund is a stash of money set aside specifically for unexpected expenses like medical bills or sudden car repairs. Having this safety net helps you avoid going into debt when life throws you a curveball. What is a sinking fund? A sinking fund is money you set aside little by little for a specific future expense, like a vacation or a new laptop. It is a super handy way to save up without stressing your everyday wallet. What is one financial rule everyone should know? One golden guideline is the 50-30-20 rule, which suggests dedicating half your income to essentials, 30% to wants, and saving the remaining 20%. It is a super simple way to keep your finances balanced. What is tax-free investing? Tax-free investing lets your money grow and compound without the government taking a cut of your earnings. Accounts like Roth IRAs are fantastic examples because your withdrawals in retirement do not owe any income tax. What is ETF liquidity? ETF liquidity refers to how easily you can buy or sell shares of an exchange-traded fund without causing a major swing in its price. It is shaped by both the trading volume of the fund itself and the liquidity of the underlying assets it holds. What is dividend investing? Dividend investing is a strategy where you buy shares in companies that regularly share a portion of their profits with investors as cash payouts. It is a wonderful way to generate steady passive income while you sleep. What is a secured credit card? A secured credit card requires a cash deposit up front that acts as your credit limit, which makes it a fantastic tool for building or repairing your credit history safely. What is an angel investor? An angel investor is an affluent individual who provides vital capital to early-stage startup companies in exchange for ownership equity. They are wonderful supporters who help brilliant business ideas get off the ground. What is operating profit? Operating profit is the money a business makes after paying for its daily operational costs, but before taxes and interest. It is a fantastic way to see how healthy a company's core business really is. What are non-durable goods? Non-durable goods are items that we use up quickly and generally last for less than 3 years, like groceries or toothpaste. They are everyday essentials we constantly need to replenish. What is an NFT? An NFT, or non-fungible token, is a unique digital item stored on a blockchain that verifies ownership of things like digital art or collectibles. What causes crypto prices to fall? Crypto prices often drop due to sudden regulatory shifts, negative market sentiment, or heavy selling pressure from large investors. It can definitely be a wild ride when the charts turn red. What is the consumer price index? The consumer price index is a helpful metric that tracks the average change in prices paid by urban consumers for a basket of everyday goods and services. It is commonly used as a key gauge to measure inflation in our economy. What is an income statement? An income statement is a financial report that shows a company's revenues and expenses over a specific period. It helps everyone see if the business is actually turning a profit. What interest rate is considered high for debt? Generally speaking, any interest rate above 10 or 15% is considered quite high for debt, especially since it can make paying off what you owe much more expensive over time. What does CPI measure? The Consumer Price Index tracks how the average prices paid by urban consumers for a common basket of goods and services shift over time. What are durable goods? Durable goods are products that don't wear out quickly and usually last for 3 years or longer, like cars, kitchen appliances, and furniture. What is a capital gains distribution? A capital gains distribution is a payment made by a mutual fund or exchange-traded fund to its shareholders when the fund sells underlying securities for a profit. It is such a handy way to receive your share of those realized earnings. What is a line of credit? A line of credit is a flexible loan agreement with a bank that lets you borrow money up to a certain limit whenever you need it. You only pay interest on the specific amount you actually use. What is a microcap stock? A microcap stock refers to shares of a publicly traded company with a very small total market value. These smaller companies can offer huge growth potential, but they also tend to come with much higher risks and volatility. What does EBITDA measure? EBITDA measures a company's overall financial performance by looking at its earnings before interest, taxes, depreciation, and amortization. It helps us see how much core profit a business generates from its normal operations alone. What makes a business recession resistant? Businesses that sell everyday essentials like groceries, healthcare products, or basic utilities usually stay strong during a downturn because people always need those goods no matter what the economy is doing. What is a non-performing loan? A non-performing loan is a credit account where the borrower has stopped making scheduled payments for a prolonged period, typically 90 days or more. Lenders closely monitor these because they pose a serious risk of default. What is a GIC? A guaranteed investment certificate is a secure savings option where you lock in your money for a set term at a fixed interest rate. It is a super safe way to grow your cash without risking the stock market. How does fear affect markets? Fear in the financial markets usually triggers sudden sell-offs as panicked investors rush to ditch riskier assets for safer havens. This emotional shift can drive prices down super fast, creating huge swings across the board. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like monthly subscription fees. It gives companies a super reliable cash flow to plan ahead with. What is pricing power? Pricing power is a company's ability to raise its product prices without losing customers to competitors. Businesses with strong pricing power can easily protect their profit margins even when inflation rises. What is a call option? A call option is a financial contract that gives you the right, but not the obligation, to buy a stock at a set price before a specific date. It is a neat way to potentially profit if a company's share price goes up. What is a short squeeze? A short squeeze happens when a heavily shorted stock rapidly increases in price, forcing pessimistic traders to buy shares quickly to cut their losses, which pushes the price even higher. Which is better, ETFs or individual stocks? ETFs are fantastic for instant diversification across many companies, whereas individual stocks let you pick specific businesses to back. Choosing between them really depends on whether you prefer a hands-off approach or love researching particular companies. What is tax loss harvesting? Tax loss harvesting is a strategy where you sell investments that have dropped in value to offset your taxable capital gains. It is a handy way to lower your overall tax bill while keeping your portfolio on track. What is intrinsic value? Intrinsic value is the true, underlying worth of an asset based on its fundamental financials rather than its current market price. Investors calculate it to figure out if a company is currently a bargain or overpriced. Why do people get trapped in minimum payments? Minimum payments keep you stuck because a huge chunk of your cash goes just toward interest rather than shrinking the actual amount you borrowed. It can turn a normal balance into a long-term debt cycle. What defines a recession? A recession is generally defined as a significant decline in economic activity spread across the economy, lasting for more than a few months. It is usually identified by a drop in gross domestic product, employment, and retail sales. What is the first step to building financial stability? Ticking things off usually starts with creating an emergency fund to cover unexpected surprises. After that, building a realistic spending plan helps you keep your goals on track. What are company assets? Company assets are all the valuable resources a business owns, from cash and inventory to buildings and equipment, that help it generate revenue. What is industrial production? Industrial production measures the total output of manufacturing, mining, and utilities in a country. It is a helpful gauge for seeing how strong the industrial sector is performing. Why is paying yourself first important? Paying yourself first means setting aside savings before you spend on anything else, which helps you build a solid financial cushion effortlessly. What happens when collateral is repossessed? When collateral is repossessed, the lender takes back the property you used to secure the loan, like a car or a home, to help recover what you owe. They typically sell it to pay off your remaining balance, but you might still be responsible for any leftover debt if the sale price doesn't cover the full amount. Why would someone buy a call? An investor usually buys a call option because they anticipate the stock price will rise, allowing them to buy shares below market value later. It is a way to potentially score big gains without needing the heavy capital to purchase the actual shares right away. Why should financial accounts use strong passwords? Strong passwords keep your hard-earned money safe by locking out hackers and preventing unauthorized access to your private info. It is a super simple way to add an extra layer of security. What is dollar cost averaging? Dollar cost averaging is simply investing a set amount of money on a regular schedule, no matter what the market is doing. It helps you buy fewer shares when prices are high and more shares when prices drop, which smooths out your average cost over time. How is PE calculated? The price-to-earnings ratio is figured out by taking a company's current stock price and dividing it by its earnings per share, which helps investors see if a stock is fairly valued. Can options flow predict stock prices? Options flow tracks large institutional trades, which can sometimes hint at where big players think a stock is heading. It offers interesting clues, but it is definitely not a crystal ball for guaranteed price movements. What is a shareholder? A shareholder is simply someone who owns at least one share of stock in a company, making them a partial owner of that business. It is a neat way to have a tiny stake in a corporation's success. What is a retirement account? A retirement account is a specialized financial plan designed to help you stash away funds for your later years, while often giving you some sweet tax perks along the way. How does dividend reinvestment create compounding? Dividend reinvestment allows you to automatically use your cash payouts to purchase additional shares instead of taking the money out. Over time, those extra shares generate their own payouts, creating a snowball effect that really speeds up your portfolio growth. Hello there. It is so wonderful to have you back with us on the stream today. What fun topic should we dive into next? What is an RRSP? An RRSP is a special tax-advantaged account designed to help Canadians save up for their retirement years while lowering their current income tax bill. It is a fantastic tool to build long-term wealth. What is an employer match? An employer match is basically free money, where your company adds funds to your retirement account based on how much you contribute. It is an amazing perk that really helps your savings grow much faster. What is a balance sheet? A balance sheet is a financial snapshot that details a company's assets, liabilities, and shareholders' equity at a specific point in time. It gives a clear picture of what the business owns and owes. What is crypto liquidity? Crypto liquidity is basically how easily a digital coin can be bought or sold for cash or other tokens without causing a massive swing in its price. What is a credit cycle? A credit cycle refers to the fluctuating waves of how easily banks lend money and how low or high interest rates go over time. It typically swings between periods where borrowing is super accessible and times when lenders tighten up. What is time value? The time value of money means that a dollar you have right now is worth more than the exact same dollar in the future because of its potential to earn interest. It is a fundamental concept in finance that highlights how money grows over time when invested wisely. What is a calendar spread? A calendar spread is an options strategy where you trade contracts on the same asset with different expiration dates to profit from shifting time decay. It is a neat way to play different time horizons in the market. What causes market crashes? Market crashes usually happen when asset prices drop sharply due to sudden panic, economic recessions, or bubbles bursting all at once. Everyone rushes to sell their shares at the exact same time, which drives prices down even further. What is dividend yield? Dividend yield tells you how much a company pays out in dividends relative to its stock price, expressed as a percentage. It is a handy metric for investors who want to see how much cash return they are getting on their investment. Why are payday loans expensive? Payday loans carry super high interest rates and fees because lenders take on a lot of risk by giving out small, short-term cash advances without checking your credit history. Since borrowers usually need the money immediately, lenders charge massive costs to make up for that risk. What is a hostile takeover? A hostile takeover happens when a company tries to acquire another business against the wishes of its current board of directors. The acquiring firm usually bypasses management to buy up a controlling stake directly from shareholders. Why do companies cut dividends? Businesses typically trim their dividend payouts when cash flow gets tight or earnings drop below expectations. Management usually prefers saving that cash to protect the core operations rather than keeping payouts high during a rough patch. What is good debt? Good debt generally refers to borrowing money for things that can help you build wealth or increase your earning potential over time, like getting an education or buying a home. These types of loans can actually improve your financial future if managed carefully. What is an options assignment? An options assignment occurs when the holder of an option exercises their right to buy or sell the underlying asset, forcing the seller to fulfill the contract terms. What is consumer proposal? A consumer proposal is a formal agreement where you work with a licensed professional to pay back a portion of your debts over time. It is a legal option that can help you avoid bankruptcy while getting your finances back on track. What is a depression? An economic depression is a severe and prolonged downturn where business activity plummets and unemployment stays extremely high for years. It is much deeper and longer lasting than a standard recession. Is it better to pay debt or invest? Choosing between paying off debt and investing usually comes down to the interest rate on what you owe compared to potential market returns. If your loan has a really high interest rate, clearing that out first is usually the smartest move. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to guide monetary policy and influence borrowing costs across the economy. What is a dividend ETF? A dividend ETF is a basket of stocks focused on companies that regularly pay out cash distributions to their shareholders. It is a fantastic way to earn passive income while keeping your overall portfolio nicely diversified. What is market liquidity? Market liquidity refers to how easily you can buy or sell an asset without causing a major swing in its price. It is super important because high liquidity means you can trade quickly whenever you want. What is a good net worth for your age? A handy benchmark is to aim. How do mortgage rates affect home prices? When mortgage rates go up, buying a home becomes more expensive, which usually cools down demand and can cause housing prices to level off or drop. What is an ETF premium? An ETF premium happens when its shares trade at a price higher than the actual net value of the underlying assets inside the fund. It usually occurs when lots of people want to buy in at the exact same time. What is a momentum stock? A momentum stock is a company whose share price has been rising quickly compared to the broader market, driven by strong recent performance and heavy investor excitement. People often trade these hoping the upward trend will keep going for a while longer. What is a high-interest savings account? A high-interest savings account is a special bank account that pays you a much better interest rate than a standard account, helping your cash grow faster. It is a wonderful spot to keep your emergency fund safe while still earning a little extra on the side. Why do companies pay dividends? Companies share a portion of their profits as dividends to reward loyal shareholders and attract more long-term investors to their stock. It is a wonderful way for businesses to share their financial success directly with the people backing them. What is dilution? Stock dilution happens when a company issues brand new shares, which splits existing ownership into smaller pieces and reduces each current shareholder's percentage stake. Is lump sum investing better than dollar cost averaging? Lump sum investing usually gives you higher overall returns because your money gets to work in the market right away. However, dollar cost averaging is fantastic for peace of mind since it spreads out your purchases and softens the blow if the market dips. What is overtrading? Overtrading happens when an investor buys and sells securities far too frequently, usually driven by impulse or excitement. It tends to hurt your overall returns because those extra transaction fees and taxes really add up over time. Why is liquidity important? Having good liquidity means you can quickly turn your investments into cash whenever you need it without losing value. It gives you incredible flexibility for emergencies or jumping on fresh opportunities. How can you double your money? Doubling your money typically relies on the power of compounding and investing in assets with strong growth potential over time. Sticking to a solid, diversified strategy helps your wealth grow naturally without taking unnecessary risks. What causes crypto prices to rise? Crypto prices usually go up when more people want to buy the digital coins than are willing to sell them. Increased adoption, positive news, and heavy market excitement are huge drivers that push those values higher. What is economic growth? Economic growth means an increase in the production of goods and services in a country over a specific period. It is usually measured by looking at changes in the gross domestic product, which shows how much a nation's overall economy is expanding. What is an income statement? An income statement is a financial document that details a company's revenues and expenses over a specific period. It ultimately shows whether the business made a net profit or a loss during that time frame. What are fixed expenses? Fixed expenses are those regular bills that stay the same month after month, like your rent or insurance premiums. Knowing these predictable costs makes it so much easier to plan your savings. How can investors simplify their portfolios? Investors can easily streamline their portfolios by focusing on broad market index funds and cutting out overlapping assets. That way, managing your investments takes way less time while still keeping things nicely diversified. What are the risks of REITs? Real estate investment trusts come with unique dangers, like sensitivity to rising interest rates and property market downturns. Plus, if tenants struggle to pay rent, the dividend payouts can definitely take a hit. What is a protective put? A protective put is an options strategy where you buy a put option to insure your stock against potential price drops. It acts like an insurance policy for your shares, so you do not have to worry about sudden market dips. What is operating margin? Operating margin is a key profitability ratio that shows how much profit a company makes after paying for its variable costs of production. It helps you see how efficiently the business is running its core operations. What is a momentum stock? A momentum stock is a company's share that has been showing really strong upward price trends recently. People love jumping into these when the market excitement is high to ride that wave of growth. What does CPI measure? The Consumer Price Index tracks the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. It is basically our go-to gauge for checking how fast the cost of living is rising. What is a savings rate? Your savings rate is simply the percentage of your total income that you manage to tuck away instead of spending. Tracking it is a fantastic way to see how quickly you are building up your financial future. How is a rainy day fund different from an emergency fund? A rainy day fund is typically set aside for smaller, unexpected expenses like minor home repairs, whereas an emergency fund handles major life events like sudden job loss. Both are super helpful to have just in case. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, giving us a clear look at a company's pure operating profitability. It is super handy for comparing businesses because it strips out financing and accounting decisions. Why do investors sell during crashes? When prices plunge, panic usually kicks. Why do housing prices rise? Housing prices usually go up when more people want to buy homes than there are properties available on the market. Low interest rates and limited new construction can also push those prices even higher. What is the stock market? The stock market is essentially a giant global marketplace where pieces of publicly traded companies are bought and sold every single day. It lets everyday people become part owners of their favorite businesses. What causes a bank run? A bank run happens when a huge crowd of depositors suddenly rush to withdraw all their money at the same time out of fear that the bank is going to run out of cash. Since banks keep only a fraction of their deposits on hand, this sudden panic can actually cause the institution to collapse. What is a seed phrase? A seed phrase is a sequence of random words generated by your cryptocurrency wallet that acts as your ultimate master key. You definitely want to keep it private because anyone who has it can access your digital funds. What is the best way to pay off debt? Tackling debt is usually best done by either using the avalanche method to knock out high interest balances first, or the snowball method for quick psychological wins. Both strategies work wonders depending on what keeps you motivated. What is proof of stake? Proof of stake is a method where blockchain networks verify transactions by having people lock up their coins as collateral instead of using massive computer power. Which assets tend to perform poorly during inflation? Cash and fixed income bonds tend to lose purchasing power during inflation because rising prices eat away at their real value. Tangible assets like real estate and commodities usually hold up much better. What is asset allocation? Asset allocation is simply the strategy of spreading your investments across different categories like stocks, bonds, and cash to help manage risk. It is a fantastic way to build a balanced portfolio tailored to your personal goals. What is goodwill? Goodwill is an intangible asset that shows up on a company's balance sheet when it buys another business for more than the net value of its identifiable assets. It usually represents things like brand reputation, loyal customers, and proprietary tech. What is a bad loan? A bad loan is generally a debt where the borrower has missed multiple repayments, making it unlikely the lender will get their money back. It usually ends up written off by the institution as a serious loss. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to manage inflation and steer the overall economy. Adjusting this rate helps influence borrowing costs for everything from mortgages to business loans. How do interest rates affect housing? When central banks raise interest rates, mortgage borrowing becomes more expensive, which usually cools down housing demand and can slow down rising home prices. What is a central bank balance sheet? A central bank's balance sheet is a financial statement listing all its assets, like government bonds and foreign currency, alongside its liabilities, such as currency in circulation and commercial bank reserves. It basically gives us a clear look at the scale of monetary policy and liquidity pumped into the economy. What is lump sum investing? Lump sum investing means putting all your available money into the market at once rather than splitting it up over time. It can give your cash more time to grow, though it can also feel a bit nerve-wracking if the market dips right after. Is the 4% rule still reliable? The 4% rule is still widely used as a helpful retirement guideline for safe yearly withdrawals, though many financial planners now suggest being a bit more flexible depending on market conditions. Why is paying yourself first important? Paying yourself first means setting aside savings before you spend money on anything else, which helps you build a solid financial safety net. It is a wonderful habit because it guarantees you consistently reach your savings goals without relying on what is left over at the end of the month. What interest rate is considered high for debt? Generally speaking, any interest rate that sits significantly higher than the historical market average, like double-digit rates on credit cards, is considered pretty high for debt. It really depends on the type of loan, but anything that adds a heavy financial burden usually falls into that category. Why is automatic saving effective? Automatic saving takes the hard work and daily willpower out of the process by moving funds directly into your savings right after payday. Because the money is put away before you even see it, you are far less tempted to spend it on impulse purchases. What is financial risk? Financial risk is simply the chance that you might lose money or that an investment will not perform as well as you hoped. Every single choice, from keeping cash under your mattress to buying shares, carries some level of uncertainty. What is a shareholder? A shareholder is simply someone who owns a piece of a publicly traded company by holding at least one share of its stock. It is super neat because you actually get a tiny bit of ownership in that business. What is a market cycle? A market cycle describes the up and down patterns that economies and financial markets go through over time, moving from expansion phases all the way to contractions. Understanding these recurring phases helps us make sense of why asset prices rise and fall. What is a zero-based budget? A zero-based budget requires you to assign every single dollar of your income to a specific category, like expenses or savings, until the total equals zero. It is a fantastic way to ensure every piece of your hard-earned money has a clear job. What is money supply? Money supply refers to the total amount of currency and other liquid assets circulating in a country's economy at any given time. It plays a huge role in shaping inflation and overall economic health. What is the biggest investing mistake? The most common blunder is letting temporary market drops panic you into selling everything at a loss. Staying calm and keeping your eyes on the long-term horizon usually yields the best results. What happens during an economic expansion? During an economic expansion, businesses thrive, jobs become much more plentiful, and overall consumer spending increases nicely. It is basically the growth phase where the entire market moves upward. What is hyperinflation? Hyperinflation happens when a country experiences extremely rapid and out-of-control price increases, causing its currency to lose almost all of its value in a very short period. It makes everyday items astonishingly expensive almost overnight. What is overtrading? Overtrading happens when someone buys and sells securities way too frequently, often racking up heavy transaction fees that eat into their actual profits. It usually stems from impatience or the urge to chase quick gains in the market. What is a sector ETF? A sector ETF is an exchange-traded fund that focuses entirely on companies within one specific industry, like technology or healthcare. It is a super handy way to diversify across a whole group of related businesses at once. How can payroll deductions help you save? Payroll deductions automatically route a portion of your earnings straight into your savings or retirement account before you even have a chance to spend it. It makes building wealth effortless because the money is saved out of sight and out of mind. What is a bank's loan-to-deposit ratio? A loan-to-deposit ratio measures the proportion of a bank's total loans compared to its total deposits to gauge its liquidity health. It is basically a quick way to see how much money the bank is actively lending out versus what it is sitting safely in customer accounts. What is hyperinflation? Hyperinflation is an extreme economic condition where prices spiral out of control and the local currency loses almost all of its purchasing power. It makes everyday necessities astonishingly expensive in a very short span of time. What is supply and demand? Supply and demand is the basic economic rule that determines the price of goods based on how much of it is available versus how badly people want it. Why does net worth matter? Your net worth acts as a complete financial health check by showing all your assets minus your liabilities. It gives you a clear picture of your overall wealth and helps guide your long-term goals. What is the first step to building financial stability? Setting up an emergency fund is usually the best starting point because it protects you from unexpected expenses. Having that cash cushion gives you real peace of mind while you plan your financial future. What is Ethereum? Ethereum is a decentralized blockchain platform that introduced smart contracts and lets developers build all sorts of decentralized apps using its native currency, Ether. Why is yield chasing dangerous? Yield chasing can be pretty risky because it usually means jumping into super high-risk investments just to score a slightly better return. It often leaves people exposed to heavy losses when those shaky assets inevitably stumble. Is volatility the same as risk? Volatility simply measures how fast and dramatically prices swing up and down, whereas risk is the actual chance of losing your hard-earned money. While a bumpy stock can be volatile, it might still be a solid long-term hold. How do banks determine credit limits? Banks figure out your credit limit by looking at your income, existing debts, and overall credit history to see how much borrowing power you can safely handle. What is the debt avalanche method? The debt avalanche method is a payoff strategy where you focus on clearing the account with the highest interest rate first while making minimum payments on the rest. It is a super smart way to minimize the total interest you pay over time. What is a covered call ETF? A covered call ETF holds a basket of stocks and sells options on those same shares to generate extra income for investors. It is a neat strategy for boosting cash flow, though it can cap your potential gains if the market shoots straight up. What is mortgage amortization? Mortgage amortization is the process of gradually paying off your home loan through scheduled monthly installments, where each payment covers both the principal and the interest. How much interest do you pay on a loan? The interest you pay on a loan depends heavily on your agreed upon annual percentage rate, your credit score, and how much you borrow. Lenders calculate it based on those factors and the total duration of your repayment schedule. What percentage of income should you save? A really popular guideline is to save around 20% of your income for the future. You can split that by putting 15% toward retirement and 5% into a short-term cash cushion. What is identity theft? Identity theft happens when a fraudster steals your personal details, like your social security number, to open accounts or commit crimes in your name. It can seriously mess up your financial standing, so keeping a close eye on your credit reports is super important. What is PIN risk? PIN risk happens when an option seller is left sweating at expiration because the underlying stock lands right at the strike price. It leaves you totally unsure whether you will suddenly be assigned shares or left empty-handed until the market officially settles. What is a crypto airdrop? A crypto airdrop is when a blockchain project sends free tokens directly to digital wallets to build community hype and reward early supporters. It is kind of like getting a surprise bonus just for participating in the ecosystem. What is a stablecoin? A stablecoin is a digital currency designed to keep a steady value by being pegged to a reserve asset like the US dollar. It helps traders dodge wild crypto price swings. What is the opportunity cost of saving cash? The opportunity cost of holding onto cash is the potential growth or investment returns you miss out on by not putting those funds to work in the market. How does fear affect markets? Fear can cause dramatic sell-offs as investors rush to protect their money from dropping prices. It often creates wild market swings because emotions take over rational decision-making. What is a three-fund portfolio? A three-fund portfolio is a super simple investment strategy that uses a total stock market fund, a total international stock fund, and a total bond fund to cover all your bases. It is a fantastic way to keep things diversified without getting overwhelmed by too many choices. How is a depression different from a recession? An economic depression is much more severe and long-lasting than a recession, typically featuring a drastic drop in global economic output and massive unemployment rates that stretch on for years rather than months. Why is time in the market important? Staying invested over the long haul matters because it gives your money more time to compound and recover from any short-term drops. Trying to jump in and out of the market usually means you miss out on the best recovery days. What is cash flow from real estate? Real estate cash flow is the leftover money you pocket each month after paying all your property expenses and mortgage costs. It is basically your passive income stream from rentals. What is revenue? Revenue is the total amount of money a business brings in from selling its goods or services before any expenses are subtracted. It is basically the top line figure that shows how much cash is flowing into the company. What is a savings rate? Your savings rate is simply the percentage of your take-home pay that you manage to set aside rather than spend. It is a fantastic metric for seeing how fast you are building up your future financial cushion. What is earnings per share? Earnings per share tells you how much profit a company has made allocated to each share of its stock. It is a handy way to check a company's profitability on a per share basis. Should retirees own stocks? Retirees often keep stocks in their portfolios to help their savings keep pace with inflation over a long retirement. Striking the right balance with bonds is key to managing risk. What is lifestyle inflation? Lifestyle inflation happens when your spending increases as your income goes up, meaning you end up buying more expensive things instead of saving the extra cash. Why is yield chasing dangerous? Chasing high yields can lead folks into risky investments that might suddenly collapse and lose value. It is usually smarter to focus on steady, reliable growth rather than just grabbing the highest payout. What is a mortgage renewal? A mortgage renewal is simply when your current mortgage term ends and you sign a new agreement with your lender, often to lock in a fresh interest rate. It is a great chance to shop around and see if another lender can offer you a better deal. How does insolvency work? Insolvency happens when a person or business simply runs out of money and cannot pay their debts as they come due. It usually leads to formal restructuring or bankruptcy proceedings to sort things out. Why is productivity important? Productivity matters because it helps you accomplish more meaningful tasks in less time, freeing up space for things you actually enjoy. It is all about working smarter rather than just harder. What makes a savings account attractive? A savings account is great because it keeps your cash safe while paying you a bit of interest on the side. Plus, you can easily access your funds whenever an emergency pops up. What is a crypto bull market? A crypto bull market is a period where digital asset prices are surging and optimism runs super high across the board. Everyone gets really excited watching those coin values climb higher and higher. Does closing a credit card hurt your credit? Closing a credit card can actually lower your score because it reduces your overall available credit and shortens your average account history length. It is usually much better to keep older accounts open with a zero balance instead. How does an ETF work? An ETF pools money from many investors to buy a whole basket of different assets, like stocks or bonds, all at once. It trades on an exchange just like a regular stock, making it a super easy way to diversify your portfolio. What is margin trading? Margin trading is when you borrow funds from a broker to purchase more shares than you could with your own cash alone. It can seriously boost your potential profits, but it also multiplies your risks just as fast. What is a dividend king? A dividend king is a company that has managed to increase its payout to shareholders for at least 50 consecutive years. It shows incredible financial strength and consistency over a very long time. What is an emerging markets ETF? An emerging markets ETF invests in companies located in developing countries experiencing rapid economic growth. It is a fantastic way to capture global opportunities while keeping your portfolio nicely diversified. Can someone save 50% of their income? Saving half of your income is definitely possible, but it takes serious dedication and lifestyle adjustments. Most people start by cutting back on dining out and non-essential shopping to make that big savings goal achievable. What is leverage in real estate? Leverage in real estate means using borrowed money, like a mortgage, to buy a property instead of paying entirely in cash. It allows you to control a much larger asset with a smaller upfront investment. What is a line of credit? A line of credit is a flexible loan arrangement from a bank that lets you borrow money up to a certain limit whenever you need it. You only pay interest on the specific amount you actually use, making it super handy for unexpected expenses. Why is customer lifetime value important? Customer lifetime value matters because it helps businesses understand the total revenue they can expect from a single customer over the entire relationship. Knowing this metric allows companies to figure out how much they can profitably spend on acquiring new buyers. What is a rate cut? A rate cut is when the central bank lowers its benchmark interest rate to help stimulate the economy and make borrowing cheaper for everyone. Which is safer for online purchases, credit or debit? Using a credit card is generally much safer for online shopping because you have stronger fraud protection and your personal bank account isn't directly exposed. If any unauthorized charges pop up, it is much easier to dispute them through the issuer. What is dividend capture? Dividend capture is a strategy where an investor buys a stock right before its ex-dividend date to collect the payout and then sells it shortly after. It takes quick timing and careful tracking to make sure the price drop doesn't outweigh the cash received. What is a rainy day fund? A rainy day fund is a special cash stash kept strictly for unexpected surprises, like sudden car repairs or medical bills. Having that extra money set aside gives you great peace of mind when life throws a curveball. What is a crypto bull market? crypto bull market is a period where digital asset prices experience a prolonged upward trend, driven by strong investor enthusiasm. Everyone gets super excited during these phases because valuations climb higher and higher. Why do people overspend? Overspending usually happens because of impulse buying, emotional triggers, or simply losing track of daily small purchases. Setting clear spending limits really helps keep those habits in check. Can you be too diversified? Yes, holding too many different assets can dilute your overall gains and make it really tough to track your portfolio properly. Sometimes keeping things focused helps you manage your investments much better. What is sequence of returns risk? Sequence of returns risk is the danger of hitting a market downturn right when you start withdrawing money from your retirement accounts. The timing can seriously deplete your savings faster than expected. What is an amortization schedule? An amortization schedule is a complete table detailing every single periodic payment on a loan, showing exactly how much goes toward principal versus interest over time. What factors affect credit scores? Credit scores are mostly determined by your payment history, how much debt you currently owe, the length of your credit history, and applying for new credit accounts. What is volatility? Volatility simply means how fast and drastically the price of an asset swings up and down over time. Higher volatility usually comes with more risk, but it also opens the door for bigger potential gains. What is herd behavior? Herd behavior happens when people blindly follow what everyone else is doing in the market instead of doing their own research. It usually leads to buying high and selling low out of pure FOMO. What is an angel investor? An angel investor is a high net worth individual who provides early-stage financial backing to startup companies in exchange for equity ownership. They are fantastic for helping new businesses get off the ground when traditional funding is hard to find. Why is tax planning important? Tax planning helps you legally minimize what you owe. What is price to book? The price-to-book ratio compares a company's current stock price to its book value per share. It helps investors figure out if a stock is currently undervalued or overpriced relative to its actual net assets. What is gross profit? Gross profit is simply the money a company makes after subtracting the direct costs associated with producing its goods or services. It shows you how efficiently a business is running its core operations. How many months of expenses should an emergency fund cover? An emergency fund should typically cover 3 to 6 months of your essential living expenses. It really acts as a great financial safety net, just in case unexpected costs pop up. What is a credit report? A credit report is a detailed history of your borrowing and repayment habits maintained by credit bureaus. Lenders check it to see how reliably you manage debt before approving loans. What is a target date fund? A target date fund is an investment portfolio that automatically adjusts its mix of stocks and bonds to become more conservative as you approach a specific retirement year. When might a trader use a straddle? A trader usually uses a straddle when they expect a massive price move in either direction, but they are not sure which way it will go. It involves buying both a call and a put option at the same strike price. How is a depression different from a recession? A recession is a significant economic slowdown that usually lasts for a few months, whereas a depression is a much more severe and prolonged downturn that can stretch on for years. What is tail risk? Tail risk refers to those rare and extreme market events that lie way out on the bell curve of probability. Even though they are super unlikely to happen, they can have a massive impact if they actually occur. Why do companies pay dividends? Companies usually pay dividends to share a portion of their profits directly with their shareholders as a reward for investing. It is a great way for businesses to attract steady, long-term investors who appreciate receiving regular cash payouts. What is a financial sector ETF? A financial sector ETF is a basket of stocks that tracks banks, insurance companies, and other financial service firms all at once. It is a handy way to invest in that entire industry without having to pick individual company winners. What is a collar strategy? A collar strategy is an options trading technique where you hold a stock while simultaneously buying a protective put and selling a covered call. It helps limit both your potential downside losses and your upside gains at the same time. What is a hard landing? A hard landing happens when aggressive central bank rate hikes successfully tame runaway inflation, but unfortunately trigger an economic downturn in the process. What is a credit bureau? A credit bureau is an agency that collects your financial data and payment history to create credit reports for lenders. They help banks figure out how reliably you manage borrowed money. What is Vega? Vega measures how much an options price changes when the volatility of the underlying asset shifts up or down. It helps traders figure out how sensitive their options are to market swings. How should financial goals be prioritized? When tackling financial goals, it is usually best to knock out high-interest debt first and build a solid emergency fund before saving for bigger milestones like a house or retirement. What does owning a stock mean? Owning a stock means you actually hold a tiny fractional piece of that company, giving you a claim on its assets and future earnings. What is value investing? Value investing is a strategy where you hunt for stocks trading way below what they are actually worth, kind like shopping for great items on clearance. It is all about finding hidden gems that the market might be overlooking right now. Why does theta matter? Theta measures how fast an option's price decays over time as it gets closer to its expiration date. It is super important for traders to watch because time is always working against option buyers. What is momentum investing? Momentum investing is a strategy where you buy assets that have been showing strong upward price trends in hopes that they will keep climbing. It is all about riding the wave of current market excitement. What is a credit bureau? A credit bureau is an independent agency that gathers your credit history to compile detailed reports used by lenders. These organizations help banks evaluate how reliably you handle borrowed funds before approving loans. What is Delta? Delta measures how much an option's price is expected to move when the underlying stock price changes by $1. It helps traders gauge their directional risk. What is a short squeeze? A short squeeze happens when heavily shorted stocks suddenly surge in price, forcing pessimistic investors to frantically buy shares back just to cover their positions and limit mounting losses. What is herd behavior? Herd behavior in the market happens when investors blindly follow what everyone else is doing instead of doing their own research. It can lead to massive price bubbles or sudden panics because people just want to run with the crowd. What is a defensive stock? A defensive stock is a company that tends to hold its ground and perform steadily, even when the broader market is having a rough downturn. They are usually in essential industries like utilities or consumer goods that people rely on no matter what. What is an earnings straddle? An earnings straddle is an option strategy where you buy both a call and a put before a big company report, aiming to profit from a massive price swing in either direction. What is an annual fee? An annual fee is a yearly charge that some credit card companies tack on just for having the card, though it often comes with sweet perks and rewards to make it worthwhile. Oh, definitely not an assistant here. I am just your friendly co-host hanging out and chatting with you on the stream. What does PMI indicate? PMI stands for Private Mortgage Insurance, which is an extra fee lenders usually require if you put down less than 20% on a home. It basically protects the lender in case the loan runs into trouble. What is an unsecured credit card? An unsecured credit card is one that does not require you to put down a cash security deposit. Lenders approve these cards based entirely on your creditworthiness instead of collateral. What is fractional reserve banking? Fractional reserve banking is a system where banks keep only a fraction of their deposits in cash reserve while lending out the rest to stimulate economic activity. It is basically how money multiplies throughout the financial system. What is net income? Net income is essentially the total profit a business makes after subtracting all expenses, taxes, and costs from its total revenue. It is often called the bottom line because it shows how much money is actually left over. How much money should you keep in an emergency fund? It is generally recommended to save about 3 to 6 months' worth of essential living expenses for your safety net. That way, you are totally covered if any unexpected surprises pop up. Why does net worth matter? Your net worth is basically your financial health score, calculated by taking everything you own and subtracting what you owe. It gives you a clear snapshot of your overall wealth and helps you track your long-term progress. What is the next dividend date? The ex-dividend date is the cutoff day when you must own a stock to qualify for its upcoming payout. If you purchase the shares on or after that date, the previous owner gets the cash distribution instead. What is economics? Economics is all about how societies choose to use their limited resources to produce and distribute goods and services. It helps us understand everything from daily consumer choices to massive global markets. What is return on assets? Return on assets is a handy metric that shows how efficiently a company uses its property and equipment to generate profit. It is calculated by dividing net income by total assets, giving you a clear picture of management's performance. How does budgeting improve financial health? Budgeting gives you total control over your cash flow, making it way easier to spot unnecessary spending and direct those funds toward your savings goals. It is honestly the absolute best foundation for building long-term financial security. How does short selling work? Short selling is when you borrow shares, sell them immediately, and hope the price drops so you can buy them back cheaper later and return them for a profit. Why would someone buy a put? Investors buy puts when they expect a stock's price to drop, giving them the right to sell shares at a set price. It is basically a way to protect your portfolio or profit during a market downturn. What is return on equity? Return on equity measures how effectively a company uses the money invested by its shareholders to generate net income. It is a fantastic indicator of financial performance and profitability. How do banks make money? Banks mainly make money by charging a higher interest rate on the loans they give out than the interest they pay to people who deposit their savings with them. They also earn extra cash through various service fees and account charges. Why are penny stocks risky? Penny stocks are super speculative because they trade at very low prices, usually under $5, and often lack proper regulatory reporting. That makes them extremely volatile and much more susceptible to sudden pump and dump schemes. How is GDP calculated? Gross domestic product is figured out by adding up total consumer spending, business investments, government purchases, and net exports. It basically gives us a complete measurement of all the goods and services a country produces. What is unsecured debt? Unsecured debt is a loan that doesn't require any collateral, meaning the lender doesn't have a claim on your house or car if you miss payments. Because of that extra risk, they usually come with higher interest rates. What is dividend investing? Dividend investing is an awesome strategy where you buy shares in companies that regularly share a portion of their profits with shareholders. It is a fantastic way to generate a steady stream of passive income while you sleep. What is pricing power? Pricing power happens when a brand can raise its prices without losing customers because people truly value its unique products. It is a huge competitive advantage in any market. What is credit utilization? Credit utilization is the ratio of how much revolving credit you are currently using compared to your total available limit. Keeping that percentage low is really important for maintaining a healthy credit score. What is excess demand? Excess demand happens when the total amount of goods and services wanted by buyers goes way beyond what suppliers are currently able to produce. That imbalance naturally causes prices to climb higher across the board. What is a leading indicator? A leading indicator is a helpful economic metric that shifts before the broader market or economy changes direction. Analysts look at these signals, like building permits or stock prices, to help forecast upcoming economic trends. What is income return? Income return is the money you receive from an investment, like rental payments or interest, expressed as a percentage of what you paid for it. What is an IPO? An IPO, or initial public offering, is the exciting process where a private company first sells its shares to the general public on a stock exchange. It is how businesses raise fresh capital to fund their future growth. How can someone increase their net worth? Growing your net worth is all about boosting your assets like savings and investments while actively paying down debts. Consistency over time really makes a huge difference in building that long-term wealth. What is customer lifetime value? Customer lifetime value estimates the total revenue a business can expect from a single customer throughout their entire relationship. It helps companies figure out how much they should invest in keeping people happy and loyal. How do you check your credit report? You can easily check your credit report for free once a week through official sites like annualcreditreport.com. It is a fantastic habit to keep an eye on your financial health and catch any errors early. Why do investors care about free cash flow? Free cash flow tells investors how much actual cash a company has left over after paying its bills and operating expenses. It is a super reliable measure of financial health because it shows the money available for dividends, debt payoff, or future growth. What is standard deviation? Standard deviation measures how much the returns of an investment bounce around compared to its average. A higher number basically means the asset has experienced a lot more volatility and price swings. How does issuing shares dilute investors? Issuing new shares increases the total number of pieces available, which means each existing owner holds a slightly smaller percentage of the overall company. It is just like slicing a pie into more pieces, so everyone gets a smaller fraction than before. What happens after missed payments? Missing your loan payments can lead to late fees, calls from collection agencies, and a noticeable drop in your credit score. Lenders report these missed deadlines to the credit bureaus, which makes future borrowing much harder and more expensive. What is refinancing? Refinancing is simply replacing your current loan with a brand new one, usually to secure a lower interest rate or better monthly payments. It is a smart way to save some extra cash over time. What is risk capacity? Risk capacity is basically how much financial loss your portfolio can handle without ruining your lifestyle or long-term goals. It depends heavily on things like your timeline, income stability, and overall wealth. Why can profitable companies run out of cash? Profitable companies can still run out of cash if their customers take too long to actually pay their invoices, or if too much money is tied up sitting in unsold inventory. It is all about timing, because having income on paper does not mean the physical dollars are in the bank, yet to cover daily bills. Should retirees own stocks? Owning stocks in retirement can actually be a great way to keep your savings growing and beat inflation. Many financial planners suggest keeping a balanced mix so you have steady income without giving up growth potential. What is a GIC? A GIC, or Guaranteed Investment Certificate, is a secure savings option where you lock away your money for a set period in exchange for a guaranteed rate of return. Can options flow predict stock prices? Options flow tracks large institutional trades, which can sometimes hint at where big market players expect the stock to move. It is definitely not a crystal ball, but it gives us a fun peek into heavy hitter sentiment. What is expiration risk? Expiration risk happens when an options contract gets closer to its deadline without becoming profitable, meaning it could end up worthless. It is definitely a race against the clock for traders holding those positions. How does home equity build? Home equity grows as you steadily pay down your mortgage principal each month, and as the overall market value of your property increases over time. What is an option spread? An option spread is when you simultaneously buy and sell multiple options of the same type to limit your maximum risk and reward. It is a neat strategy to manage your potential exposure in the market without breaking the bank. How do interest rates affect stocks? When interest rates go up, borrowing becomes more expensive for companies, which can slow down their growth and put pressure on stock prices. It is all about how the cost of capital shifts across the whole market. What causes a stock to fall? Stocks usually drop when a company reports lower earnings than expected, or when broader economic conditions like inflation make investors nervous. It is just part of the normal ups and downs of the market. How do REITs make money? Real estate investment trusts make money primarily by collecting rent from tenants across their large property portfolios and through the appreciation of their real estate holdings over time. How is cap rate calculated? The capitalization rate is figured out by taking the net operating income of a property and dividing it by its current market value. It gives investors a quick snapshot of their potential annual return. What is a debit card? A debit card lets you spend money directly from your checking account for everyday purchases without needing to borrow anything. It is super convenient because the cash comes right out of your balance right away. What is risk capacity? Risk capacity is basically how much financial loss you can comfortably handle without hurting your long-term standard of living. It looks at your current income, savings, and timeline to see how much room you have to take on volatility. How is market capitalization calculated? Market capitalization is figured out simply by taking the total number of a company's outstanding shares and multiplying that by the current share price. It gives us a quick way to see the overall size and value of the business in the stock market. What factors affect credit scores? Credit scores are primarily shaped by your payment history, how much total debt you currently owe, and the length of your credit track record. Keeping those factors in great shape is the best way to secure lower interest rates down the road. What is the 50-30-20 budgeting rule? The 50-30-20 rule is a neat strategy where you divide your after-tax income into 3 distinct buckets for needs, wants, and savings. It makes managing your money super simple and keeps your financial goals on track. What is gross margin? Gross margin is calculated by taking your total revenue, subtracting the cost of goods sold, and then dividing that result by total revenue to show the percentage of sales left over to cover other expenses. What is proof of stake? Proof of stake is a consensus mechanism where blockchain network validators lock up their crypto tokens to verify transactions and secure the system. Instead of heavy computing power, your chance to validate blocks depends on how many coins you have staked. What is the debt snowball method? The debt snowball method is a repayment strategy where you focus on clearing your smallest debt balance first while making minimum payments on the rest. Once that first balance is gone, you roll its payment into the next smallest one, building awesome momentum as you go. Why do people get trapped in minimum payments? Minimum payments trap folks because they only cover a tiny sliver of the principal, while the rest goes to high interest charges, making the debt drag on forever. What is beta? Beta measures how wildly a specific stock bounces around compared to the broader market. A higher number means the shares are way more volatile. How do you calculate rental yield? To find the rental yield, you take your total annual rental income, divide it by the property's purchase price, and multiply by 100 to get the percentage. It is a super helpful way to see how much return you are getting on a real estate investment. What happens when someone defaults on a loan? When someone defaults, it means they stopped making their required payments and broke the loan agreement. That can seriously damage their credit score and lead the lender to take legal action or seize collateral. How does issuing shares dilute investors? When a company issues new shares, existing owners end up owning a smaller overall slice of the pie. That means each current share represents a slightly lower percentage of the total company value. What is a stock option? A stock option is a handy financial contract that gives you the right, though not the obligation, to buy or sell shares at a set price before a specific deadline. What is quality investing? Quality investing is a strategy focused on buying shares of stable, highly profitable companies with solid balance sheets and reliable competitive advantages. It is all about finding businesses that can consistently generate strong returns over the long haul. What is preferred stock? Preferred stock is a unique class of ownership that usually pays fixed dividends and takes priority over common shares if the company ever issues payouts. Holders typically do not get voting rights, but they enjoy a lot more income stability. What is a credit union? A credit union is a member-owned financial cooperative that offers similar services to a traditional bank, but usually with lower fees and better interest rates. Because they are nonprofit organizations, they focus on serving their members rather than maximizing corporate profits. Why is productivity important? Productivity is super important because it helps us make the most of our time and energy, allowing us to hit our goals without burning out. When we find efficient ways to get things done, we actually free up more space to relax and enjoy our day. What does PMI indicate? PMI stands for Private Mortgage Insurance, which lenders usually require if you put down less than 20% on a home purchase. It basically protects the lender just in case the borrower runs into trouble and cannot make their payments. What is implied volatility? Implied volatility is basically a metric that tells us how much the market expects a stock's price to fluctuate going forward. Traders use it to gauge potential future swings and price options more accurately. What is a calendar spread? A calendar spread is an option strategy where you buy and sell contracts on the same underlying asset with identical strike prices, but different expiration dates. Traders use this setup to take advantage of how time decay impacts options differently across varying timeframes. How does a GIC work? A guaranteed investment certificate is a secure savings product where you lock in your money with a bank for a set period in exchange for a guaranteed interest rate. Once the term is fully complete, you get back your original deposit plus all the interest you earned. What is cash flow from real estate? Real estate cash flow is the net money you pocket each month after paying all your operating expenses and mortgage debts from the rental income. It is essentially your profit, and positive cash flow means your property brings in more cash than it costs to keep running. What does a high PE mean? A high price-to-earnings ratio typically means investors expect much faster earnings growth in the future compared to other companies. It can signal that a stock is priced optimistically, but it might also indicate the shares are expensive. What is a meme stock? A meme stock is a company whose shares surge dramatically in price purely because of social media hype and online communities, rather than its actual business performance. What is unemployment? Unemployment is a metric that tracks the percentage of people in the labor force who are currently jobless and actively looking for work. It is a key indicator economists use to check the overall health of the economy. How does fear affect markets? Fear in the markets usually sparks heavy selling and panic, causing stock prices to drop quickly as investors rush to safety. It is fascinating how emotional sentiment can drive massive shifts so fast. What is customer lifetime value? Customer lifetime value estimates the total revenue a business can expect from a single customer throughout their entire relationship. It helps companies figure out how much they can safely spend on acquiring new buyers. Why does fund turnover matter? Fund turnover measures how frequently securities within a portfolio are bought and sold by the manager. Higher turnover usually leads to increased transaction costs and can trigger more capital gains taxes, which ultimately impacts your overall returns. What is inflation risk? Inflation risk is the danger that rising prices will eat away at the purchasing power of your money over time. It is a big reason why keeping all your savings in cash can be tricky. What is a mortgage? A mortgage is a specialized loan you take out from a lender to help finance the purchase of a home. You pay it back in installments over a long period, usually 15 to 30 years, until the property is fully yours. Is dividend investing better than growth investing? Dividend investing focuses on steady income through regular payouts, whereas growth investing aims for capital appreciation by backing expanding companies. Which strategy fits your personal goals better depends on whether you prefer cash flow or long-term expansion. What is a limit order? A limit order is an instruction you give to buy or trade a stock only at a specific price or better. It helps you control your costs so you do not end up paying more than you planned. What is socially responsible investing? Socially responsible investing is a strategy where you put your money into companies that align with your personal values, like environmental sustainability or ethical business practices. It lets you support causes you care about while still aiming for financial returns. What is investment time horizon? An investment time horizon is simply the total length of time you plan to hold onto your assets before needing to cash them out. Knowing your time frame helps you pick the right mix of risk and stability for your goals. Is investing early more important than investing more? Starting early usually gives your money more time to compound and grow through returns, which is often considered more powerful than just putting in large sums later on. Getting a head start lets time do a lot of the heavy lifting for you. What are company liabilities? Company liabilities are basically the financial debts and obligations that a business owes to outside parties. They include everything from short-term bills to long-term loans that need to be paid off over time. What is an index? An index is a collection of specific stocks designed to track the overall performance of a particular market or segment. It gives us a great snapshot of how the broader economy is doing. What is an ETF discount? An ETF discount happens when the market price of the fund trades slightly below the actual net value of its underlying assets. It can sometimes present a neat little bargain for savvy buyers. What is a seed phrase? A seed phrase is a secure sequence of random words generated by your crypto wallet that lets you recover all your digital assets if your device ever gets lost. What is a financial sector ETF? A financial sector ETF is a basket of securities that tracks banking, insurance, and investment firms all at once. It makes it super simple to get broad exposure to the entire financial industry through a single trade. What is a startup valuation? A startup valuation is the estimated financial worth of a brand new business determined by investors. It helps figure out how much ownership stake founders give up in exchange for funding. What makes a savings account attractive? Savings accounts are great because they offer a safe place to stash your cash while earning a little bit of interest on the side. Plus, your money is easily accessible whenever you might need it. What is a savings account? A savings account is a secure place to keep your extra cash while earning a modest amount of interest over time. It lets you easily access your money whenever an emergency or a planned purchase pops up. How does home equity build? Home equity grows as you pay down your mortgage principal over time and as the overall market value of your property increases. It is basically the portion of your home that you truly own free and clear. What is implied volatility? Implied volatility is a metric that shows how much the market expects an asset's price to fluctuate going forward. Traders use it to gauge potential risk and help price options contracts accurately. Why is automatic saving effective? Automatic saving removes the temptation to spend by moving your cash straight into a savings account before you even have a chance to touch it. What is an accumulating ETF? An accumulating fund automatically reinvests all the dividends it earns right back into the portfolio instead of paying them out to you. This is a super handy way to grow your wealth over time because those returns compound without you having to lift a finger. What are the risks of REITs? Real estate investment trusts can carry risks like interest rate sensitivity, property value drops, and tenant vacancy issues. It is always smart to weigh those factors carefully before jumping in. How long does it take to build good credit? Building a solid credit history usually takes several months to a few years of consistent, on-time payments. Keeping your balances low makes a huge difference too. How much does someone need for fire? The FIRE movement usually relies on the 25 times rule, meaning you need about 25 times your annual living expenses saved up. It all depends on your desired lifestyle and how much you plan to spend each year. Can cryptocurrency hedge against inflation? Cryptocurrency is often viewed by its fans as a digital hedge against inflation, since many tokens have capped supplies. However, their wild price swings make them pretty risky compared to traditional inflation hedges like gold. What is a stock option? A stock option is simply a contract that gives you the right to buy or sell a specific stock at a set price within a certain time frame. It is a neat tool that traders use to speculate on price movements or protect their existing portfolios. Why does dollar cost averaging work? Dollar cost averaging works by purchasing fixed amounts of an asset on a regular schedule, regardless of the price. This clever strategy means you naturally buy more shares when prices are low and fewer when they are high, which helps smooth out market volatility over the long run. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to manage monetary policy and steer the overall economy. Financial institutions use it as a guide for lending and borrowing costs. Stocks are such an exciting way to be part of building something big. Owning a piece of your favorite companies lets you share in their future growth. What is a put option? put option gives the holder the right to sell a stock at a specified price within a set time frame, acting like insurance if the market drops. What is money supply? Money supply refers to the total amount of currency and other liquid assets circulating in an economy at any given time. Central banks keep a close eye on this metric because managing it helps them control inflation and influence economic growth. What is the most important financial lesson you have learned? For me, the biggest lesson has been realizing how powerful automated savings can be for reaching long-term goals without the stress. It makes building a secure future feel completely effortless. What is an annual percentage rate? An annual percentage rate represents the yearly cost of borrowing money or the yearly earnings on an investment, including any fees. It is super helpful for comparing different loans or credit cards side by side. What is a bank's provision for credit losses? A provision for credit losses is basically money a bank sets aside to cover loans that customers might not be able to pay back. It helps keep lenders financially stable when times get a bit tough. What is a savings deposit? A savings deposit is money you place into a bank account that usually earns a little bit of interest over time. It is a super safe place to keep your cash while keeping it easily accessible for future needs. Is volatility the same as risk? Volatility and risk are actually a bit different. Volatility measures how fast and dramatically prices swing up and down, whereas risk is really the chance of losing your invested capital permanently. What is a rate hike? A rate hike is when the central bank decides to push its benchmark interest rate higher to help cool down inflation. It usually means borrowing money for things like mortgages or loans gets a bit more expensive. What is a credit cycle? A credit cycle refers to the alternating waves of expansion and contraction in lending availability and interest rates over time. When the economy is booming, banks tend to loosen credit, but during tighter times, borrowing becomes much more selective and cautious. What is a bank statement? A bank statement is a helpful summary that your bank sends out every month, showing all the deposits, withdrawals, and purchases you made during that period. It is a fantastic tool for keeping tabs on your spending habits. Why does inflation matter to investors? Inflation gradually chips away at your purchasing. What does a high PE mean? A high price-to-earnings ratio typically suggests that investors expect much higher earnings growth in the future compared to other companies. It often means the stock is priced expensively relative to its current profits. What is refinancing? Refinancing simply means replacing your current loan with a brand new one, usually to secure a lower interest rate or better monthly terms. It is a fantastic way to lower your overall borrowing costs. What are refinancing costs? That's a great question. What are your thoughts on it? What is a mortgage down payment? That's a great question. What are your thoughts on it? How should financial goals be prioritized? That's a great question. What are your thoughts on it? What is initial margin? Initial margin is simply the upfront percentage of cash or collateral you need to deposit with your broker. before you can borrow money to buy securities on margin. Why do companies cut dividends? Here is the JSON requested. JSON. Why do investors sell covered calls? Investors usually sell covered calls to generate. What is a 401k? That's a great question. What are your thoughts on it? What is a home equity line of credit? That's a great question. What are your thoughts on it? What is a 0 days to expiration option? A 0 days to expiration option is a contract that expires on the exact same trading day it is bought or sold, which makes it super popular for fast-paced day trading. What is the Russell 2000? That's a great question. What are your thoughts on it? What is gross profit? That's super interesting. Tell me more about it. What is the opportunity cost of saving cash? Here is the JSON requested. Why can options lose value after earnings? Here is the JSON requested. What does CPI measure? A consumer price index measures the average change in prices that people pay for everyday goods and services like. What is commercial real estate? That's a great question. What are your thoughts on it? What is a HELOC? A HELOC is a home equity line of credit, which lets you borrow money using the equity you've built up in your house as collateral. What is a leveraged buyout? A leveraged buyout happens when a company is acquired using a huge amount of borrowed money, with the target company's own assets usually backing the loan. What causes impulse purchases? Impulse buying usually happens when emotions take over, and you make a quick purchase without really thinking it through. Seeing a sudden discount or fun item can trigger that instant urge to buy. How does quantitative tightening affect markets? Quantitative tightening happens when a central bank reduces its balance sheet by selling assets or letting them mature, which generally pulls money out of the financial system and can cause tighter borrowing conditions. What are the risks of covered calls? That's a great question. What are your thoughts on it? How can you measure ETF diversification? That's a great question. What are your thoughts on it? When might a trader use a strangle? A trader typically uses a strangle strategy when what causes inflation? That's a great question. What are your thoughts on it? What is tax efficiency? That's a great question. What are your thoughts on it? Can investors consistently time the market? Here is the JSON requested. JSON. How does deflation affect investments? Deflation generally makes cash end. What is a rental property? That's a great question. What are your thoughts on it? What is an international ETF? An international ETF is an exchange. How does money supply affect the economy? When there's more money circulating, interest rates. What is the biggest budgeting mistake people make? What is the most common slip? What is a mortgage? That's a great question. What are your thoughts on it? How does supply affect prices? When the supply of something goes up, why should private keys remain private? Your private key acts like the ultimate. What is fund concentration? Fund concentration happens when an investment fund puts a What is a soft landing? A soft landing happens when a central bank raises interest. Why is free cash flow important? Free cash flow shows the actual cash of business. What is Ethereum? Ethereum is a decentralized blockchain system that lets developers build. What is an ETF discount? An ETF discount occurs when the current What is an initial public offering? An IPO is basically when a private company decides to sell shares to the public on a stock exchange for the very first. What is factor-based ETF investing? Factor-based ETF investing picks stocks. What is one financial rule everyone should know? One classic guideline is to always pay yourself first by. How do banks make money? Banks mostly earn revenue by lending out money at higher. What is operating leverage? That's a great question. What are your thoughts on it? What is dividend yield? Dividend yield is a percentage that shows how much cash a company returns to its shareholders in payouts each year compared to its current stock price. It's basically a helpful way to measure the passive income return you get from owning that stock. What is automatic saving? Automatic saving is a set-it-and-forget-it system where you schedule recurring transfers straight from your checking account into a savings or investment account. It helps you consistently build up your cash reserves without even having to think about manually moving money every payday. Why does consumer confidence matter? That's a great question. What are your thoughts on it? How can you stay motivated to save money? Setting concrete goals, like saving for a dream trip or a rainy day fund, gives your money a clear purpose that feels rewarding. You can also track your progress visually or celebrate small milestones to keep yourself inspired as your savings grow. What is a coincident indicator? A coincident indicator is an economic metric that moves right along with the current state of the overall economy, giving us a real-time snapshot of how things are going right now. What is drawdown? A drawdown measures the peak-to-trough drop in the value of an investment portfolio before it recovers to a new peak. It helps investors understand the potential downside risk they might experience during a market slump. How does home equity build? Home equity grows naturally as you make your monthly mortgage payments, which slowly pay down the principal balance you owe. Plus, your property's value can appreciate over time in the real estate market, giving your overall equity an extra boost. What is a microcap stock? A microcap stock refers to shares in a company with a very small total market capitalization, usually under $300 million. These smaller businesses can have massive growth potential, but they also tend to carry higher risks and volatility. How do banks determine credit limits? Banks figure out your credit limit by looking closely at your income, existing debts, and overall credit history to see how much borrowing power you can safely handle. Why do companies pay dividends? Companies hand out dividends to share their profits directly with investors, which helps reward people for sticking around and holding on to their shares for the long haul. Which is better, stocks or real estate? Both options have great perks, since equities offer higher potential growth and liquidity, while property investments provide steady rental income and tangible physical value. How does a mortgage work? A mortgage is basically a specialized home loan that lets you borrow money from a lender to buy a property. You then pay it back in regular monthly installments over a long period, usually 15 or 30 years, until the loan is fully settled. What is the 50-30-20 budgeting rule? The 50-30-20 rule is a super handy guide where you split your after-tax income into needs, wants, and savings. It suggests putting half toward essentials, 30% on lifestyle choices, and 20% straight into your savings or debt payoff. What is a rate hike? A rate hike happens when a central bank raises its benchmark interest rate to help slow down inflation and cool off the economy. What is money supply? The money supply represents the entire What is a long-term financial goal? A long-term financial goal is a major milestone you plan to achieve years down the road, like saving for retirement or buying a house. Having these clear targets helps you stay focused and map out your savings plan over time. What is an IPO? An IPO is when a private company decides to sell its shares to the general public for the very first time on a stock exchange. It is a huge milestone because it allows everyday investors to finally buy in and help fund the company's next big chapter of expansion. How are stock market indexes created? Stock market indexes are created by selecting a specific group of companies that represent a portion of the market and weighting them by their size or market value. This lets us easily track how that particular segment of the economy is performing overall. What is an initial public offering? An initial public offering is basically when a private business opens up its ownership by selling shares to the public for the first time. It is a super exciting step because it lets everyday folks buy in and helps the company grow even bigger. How does supply affect prices? When supply goes up while demand stays the same, prices usually drop because there's plenty to go around. On the flip side, if something becomes super rare and supply shrinks, prices tend to shoot right up. What are non-durable goods? Non-durable goods are items that you use up quickly or that last for a short time, usually less than 3 years, like food and paper products. What is growth investing? Growth investing focuses on purchasing shares in companies that are expected to expand at an above-average pace compared to the rest of the market. People who choose this strategy usually look for businesses launching innovative products or entering fresh markets. What is a short squeeze? A short squeeze happens when heavily shorted stocks quickly rise in price, forcing traders who bet against them to buy shares rapidly to cut their losses. What is option premium? An option premium is the upfront cost you pay to buy an options contract, giving you the right to trade a stock at a set price later. It represents the total market value of that contract. What is a diagonal spread? A diagonal spread is an option strategy where you buy and sell two contracts on the same asset with different strike prices and expiration dates. It lets traders balance risk and potential profit by combining elements of vertical and calendar spreads. How do mortgage rates affect home prices? When mortgage rates go down, borrowing becomes cheaper, which usually drives up home prices because more buyers enter the market. Conversely, higher rates make loans more expensive, often cooling down demand and easing home price growth. What does a high PE mean? A high price-to-earnings ratio typically means investors expect much higher growth in the future compared to other companies. It can also suggest that the stock might be priced a bit on the expensive side right now. What is a central bank? A central bank is a national financial institution that manages a country's currency, money supply, and interest rates. They help keep the economy stable and regulate commercial banks. How can you improve your debt-to-income ratio? You can improve your debt-to-income ratio by either paying down your existing balances or finding ways to boost your monthly income. Keeping that number low makes you look much better to lenders when you want to apply for a loan. What is working capital? Working capital is the money a company uses for its everyday operations, calculated by taking current assets and subtracting current liabilities. It shows whether a business has enough short-term resources to cover its daily bills and keep things running smoothly. What is a bull-put spread? A bull-put spread is an option strategy where you sell a put option at a specific strike price and buy another put at a lower strike price to limit your potential losses. Traders usually set this up when they feel optimistic about the market and want to collect a net credit from the premiums. What are fixed expenses? Fixed expenses are those regular bills like rent or insurance that stay pretty much the same every single month. They make up the foundation of any good budget because you can always count on them showing up. What is theta? Theta is an options metric that measures how fast a contract loses its value as time passes. It essentially tracks the daily decay working against the option buyer. How much does someone need for FIRE? The FIRE movement usually suggests saving about 25 times your annual living expenses to retire early. That way, you can safely withdraw a small percentage each year without running out of funds. What is discounted cash flow analysis? Discounted cash flow analysis is a method used to estimate the value of an investment by predicting its future cash earnings and discounting them back to today's dollars. It helps investors figure out if a company is currently undervalued or overvalued. What is inflation? Inflation is the general increase in prices over time, which reduces the purchasing power of your money. It means the same amount of cash buys you fewer goods and services than it used to. What is a speculative stock? A speculative stock belongs to a company with a lot of unproven potential, meaning it could experience massive growth or struggle completely. They tend to carry much higher risk compared to established blue-chip companies. What is cryptocurrency? Cryptocurrency is a digital currency that uses cryptography for security and operates on decentralized networks like blockchains without a central bank. How does a stock price change after a dividend? When a company pays out a dividend, its stock price typically drops by roughly that same cash amount on the ex-dividend date. This happens because the business is officially distributing a portion of its value directly to shareholders, which reduces the overall worth left inside the company. What is revenue growth? Revenue growth measures how much a company's total sales increase over a specific time frame. It is a key sign of a healthy business expanding its market share. How can you avoid credit card interest? You can completely avoid paying credit card interest by paying off your statement balance in full every single month before the due date. It is such a simple habit that saves you a lot of extra money. What is excess demand? Excess demand happens when buyers want to purchase more of a product than what is actually available in the market. This shortage naturally pushes prices upward until supply and demand balance out again. Why can options lose value after earnings? Options can drop in value quickly after an earnings report due to a sharp decrease in implied volatility, which is often called an IV crush. Even if the stock moves, if it doesn't move as much as the market anticipated, the inflated option prices rapidly deflate. If you could invest $10,000 today, where would you put it? If I had $10,000 to invest today, I would probably spread it across a few solid index funds for steady long-term growth. Diversification is a really smart way to keep risk manageable while still building wealth. What defines a recession? A recession is officially defined as a significant economic decline spread across the economy that lasts for more than a few months. During this period, we typically see drops in real GDP, employment, and industrial production. What is Bitcoin? Bitcoin is a decentralized digital currency that lets people send and receive money securely across the internet without relying on banks or governments. What is headline inflation? Headline inflation measures the total change in the cost of living for a typical household, including everything from grocery prices to energy bills. It gives us a broad look at how fast overall prices are moving across the entire economy. What is the Producer Price Index? The Producer Price Index tracks the average changes in prices that domestic producers receive for their output. It gives us an early look at potential inflation trends before they actually hit consumers at the checkout counter. What is amortization? Amortization is the process of spreading out a loan into equal periodic payments over time, with each payment covering both principal and interest. It helps you chip away at the debt bit by bit. What is lean fire? Lean fire is a minimalist approach to financial independence, where you plan to retire early on a smaller annual budget by keeping your living expenses very low. It is all about achieving freedom through frugal living rather than needing a massive nest egg. What is a market order? A market order is simply an instruction to buy or sell an asset immediately at the best available current price. It guarantees your trade will go through right away, though the exact final execution price might shift slightly by the time it fills. What is an ETF? An ETF, or exchange-traded fund, is a basket of different securities like stocks or bonds that trades on an exchange just like a single stock. It makes diversifying your portfolio super easy without needing to buy every single company individually. What factors affect credit scores? Credit scores are mostly shaped by your payment history, how much debt you currently owe, and the length of your credit history. Keeping those payments on time makes a huge difference in keeping your score healthy. What is an expiration date? An expiration date tells you the exact deadline when a perishable item or contract is no longer valid or safe to use. Once that day passes, food might spoil or financial options lose all their value. What is an installment payday loan? An installment payday loan is a short-term cash advance that you pay back in smaller, scheduled increments rather than all at once on your next payday. They often come with very high interest rates and fees, so it is definitely smart to look at safer alternatives first. How many months of expenses should an emergency fund cover? An emergency fund should typically cover 3 to 6 months of your essential living expenses to protect you from unexpected surprises. It is a fantastic safety net to give you peace of mind. Hello there. I am so glad you tuned in to hang out with us today. What is a pension? A pension is a retirement plan where an employer makes regular contributions into a pool of funds set aside for your future benefit. Once you retire, you get regular payouts to help support your living expenses. What is net operating income? Net operating income is the total revenue a property brings in minus its necessary operating expenses, giving you a clear picture of its profitability before taxes and mortgage payments are factored in. What is a large cap stock? Large cap stocks represent ownership in massive, well-established companies with huge market values, usually in the tens of billions. They are typically seen as more stable choices because these businesses have proven track records. What is Delta? Delta usually measures how fast an options price moves relative to changes in the underlying asset's price. It is super helpful for gauging risk when trading derivatives. Can cryptocurrency hedge against inflation? Some people view certain cryptocurrencies like Bitcoin as a potential hedge because of their limited total supply, much like gold. However, due to its extreme price swings and short history, crypto doesn't always reliably protect your purchasing power when prices rise. What is yield chasing? Yield chasing happens when investors hunt around for the absolute highest interest rates or dividend payouts, often taking on much higher risks without realizing it. It can be super tempting, but those extra high returns usually come with hidden dangers. How can you stop impulse spending? To curb impulse buying, try giving yourself a mandatory waiting period before making non-essential purchases. Unsubscribing from store emails also helps remove those tempting daily sales alerts. What is the first step to building financial stability? The very first step is figuring out where your money goes by tracking your income and spending. Once you see your cash flow clearly, setting up a small starter emergency fund makes a huge difference. What is inventory turnover? Inventory turnover tells us how many times a business sells and replaces its stock of goods over a specific period. It is super helpful for seeing how efficiently a company manages its products. Should you use an emergency fund to pay debt? Generally, it is best to keep your emergency fund completely untouched for unexpected crises, rather than using it to pay off regular debts. Draining your safety net leaves you vulnerable if another surprise expense pops up before you rebuild it. What is an IRA? An IRA is a special tax-advantaged account designed to help you save and invest for your retirement years. It gives you fantastic tax breaks to help your money grow over the long haul. What is a retirement account? A retirement account is a special savings plan designed specifically to help you set aside money for when you stop working, often offering wonderful tax benefits to help your funds grow over time. How can payroll deductions help you save? Payroll deductions let you automatically set aside a portion of your paycheck straight into savings or retirement accounts before you even see the money. It takes the guesswork out of building wealth since the transfer happens effortlessly every single pay period. What are company liabilities? Liabilities are essentially the debts and financial obligations a company owes to outside parties, like loans or accounts payable. Keeping an eye on them helps us see how much financial pressure a business is under. What is a vertical spread? A vertical spread is an options trading strategy where you buy and sell two options of the same type and expiration date, but at different strike prices. It helps limit both your potential risk and your maximum reward. Why is ROIC important? Return on invested capital is super important because it shows how efficiently a company allocates its money to generate profitable growth. It basically tells us if the business is actually creating value with its funds rather than just wasting them. What is debt consolidation? Debt consolidation means taking out one single new loan to pay off all your smaller various debts at once. It helps simplify your payments by combining them into just one monthly bill. What is a margin call? A margin call happens when the value of your invested securities drops below a certain required level. forcing your broker to demand that you deposit more funds or sell assets immediately. How does a stock price change after a dividend? When a company pays a dividend, its stock price typically drops by roughly the exact amount of the payout on the ex-dividend date. That happens because cash is leaving the company's accounts, which immediately reduces the overall value of the business. What is a covered call ETF? A covered call ETF is a fund that holds a basket of stocks and simultaneously sells call options against them to generate extra income for investors. It is a super neat strategy for boosting cash flow, especially when the market is moving sideways. What is downside risk? Downside risk is simply the estimated potential loss you could face if an investment's market price takes a turn for the worse. It helps us figure out the absolute worst-case scenario before diving into a trade. What is underemployment? Underemployment happens when people are working in jobs that do not fully use their skills, or when they can only find part-time work even though they want full-time hours. It is a tricky situation because workers aren't earning as much as they are capable of making. What is tokenization? Tokenization turns real-world assets into digital tokens on a blockchain, making fractional ownership much easier. It opens up cool new ways to trade things like real estate or art. How is dividend yield calculated? To find the dividend yield, you just take the annual payout per share and divide it by the current stock price. It is a handy little percentage that helps us see how much cash flow we are getting relative to the share's cost. What is a pension? A pension is a retirement plan where an employer puts money aside for an employee, so they receive regular payments after they stop working. How do banks make money? Banks primarily make money by charging a higher interest rate on the loans they give out than the interest they pay to people keeping savings in their accounts. They also earn revenue through various account fees and service charges. What is revenue? Revenue is the total amount of money a business brings in from selling its goods or services before subtracting any expenses. It is basically the top line on an income statement. What is long-term investing? Long-term investing is all about holding on to your assets for years or even decades to let compounding work its magic. It is a super chill strategy that helps you ride out short-term market bumps and focus on future growth. What is a hard credit inquiry? A hard credit inquiry happens when a lender checks your credit report because you applied for a new loan or credit card, which can temporarily impact your score. What does a central bank do? A central bank manages a country's currency, controls the money supply, and sets monetary policy to keep inflation in check. They also act as a lender of last resort for commercial banks during financial troubles. What is a soft credit inquiry? A soft credit inquiry is simply a routine check of your credit report that doesn't hurt your credit score at all. It usually happens when you check your own score or when a company pre-approves you for an offer. What is proof of work? Proof of work is a security mechanism used by blockchains to verify transactions and mine new coins through intense computational puzzles. It helps keep the network secure and prevents fraudulent activity. Why do banks pay interest on deposits? Financial institutions offer interest on your savings to encourage you to keep your money with them. They use those pooled funds to finance loans and generate their own earnings. What is preferred stock? Preferred stock is a special type of ownership share that usually gives you fixed dividend payments before common stockholders get anything. It acts a bit like a hybrid between regular stocks and bonds. What is inflation risk? Inflation risk is the danger that the purchasing power of your money will drop over time because the prices of goods and services are rising. It basically means your cash won't buy as much in the future. What is a bull market? A bull market happens when stock prices are rising steadily and investor confidence is running super high. It is basically an upbeat period where the overall market is doing wonderfully. What is intrinsic value? Intrinsic value is the true, underlying worth of an asset based on its fundamentals, rather than just its current market price. It is super helpful for spotting great deals when the market is fluctuating. What is retail sales? Retail sales measure how much stuff consumers are buying directly from stores, websites, and restaurants. What are private investments? Private investments involve putting money into privately held companies or assets that aren't traded on public stock exchanges. They often require higher capital minimums and lock up your funds for longer periods, but they can offer some really unique growth opportunities. What is return on invested capital? Return on invested capital is a fantastic metric that shows how efficiently a company uses its money to generate profits. It essentially measures how well management allocates capital into profitable projects. How do interest rates affect housing? When borrowing costs go up, monthly mortgage payments become more expensive, which usually cools down the housing market because fewer people can afford to buy. What is volatility? Market volatility measures how sharply and quickly asset prices swing up and down over a given period. Higher volatility usually means the market is experiencing a lot of uncertainty and bigger emotional shifts. Why are payday loans expensive? Payday loans usually carry very steep fees and high interest rates because they are short-term loans meant to be paid back by your next paycheck, which poses a greater risk for lenders. What factors affect credit scores? Credit scores are shaped by a few key things, like paying your bills on time, how much debt you currently owe, and how long your credit accounts have been open. Keeping a close eye on these habits is a great way to keep your financial health looking stellar. What is an economic moat? An economic moat refers to a company's distinct competitive advantage that helps it protect its market share and fend off rivals over the long haul. Businesses with strong moats usually have loyal customer bases or unique assets that are really tough for competitors to copy. What is crypto market capitalization? Crypto market cap is the total value of all the coins in circulation right now. You calculate it by multiplying the price of a single coin by the total number of coins that have been mined or issued. Why does the down payment matter? Putting down a bigger chunk of cash upfront lowers your overall loan amount and can help you dodge those extra monthly mortgage insurance fees. Plus, lenders love seeing it because it shows you have solid financial backing. What is a microcap stock? A microcap stock refers to a publicly traded company with a very small total market value, usually under $300 million. These smaller businesses can have massive growth potential, but they also tend to carry higher risks and less trading volume. What is bid-ask spread? The bid-ask spread is basically the gap between the highest price a buyer is willing to pay and the lowest price a seller will accept. It acts like a transaction cost that you see in active trading. What is market capitalization? Market capitalization represents the total worth of a publicly traded company, calculated simply by multiplying its share price by the total number of existing shares. It gives us a quick way to see how large a business is. What is a unicorn company? A unicorn is a startup that reaches a valuation of $1 billion or more without being listed on the public stock exchange. These rare private companies are usually fast-growing tech disruptors. What is a turnaround stock? A turnaround stock is a financially struggling company that shows strong potential for recovery through new leadership or a solid business pivot. Investors often look for these gems when they want to catch a company on the rebound. What is a competitive moat? A competitive moat is basically a company's unique superpower that protects it from rivals and helps keep its market share safe over time. It could be something like a super loyal customer base or patents that are really tough for anyone else to copy. What is economic expansion? Economic expansion is a phase of the business cycle where the overall economy grows, resulting in higher employment, increased consumer spending, and rising business profits. What is economics? Economics is the study of how society chooses to allocate its scarce resources to produce and distribute goods and services. It helps us understand everything from daily household spending to massive global markets. How does Bitcoin mining work? Bitcoin mining uses powerful computers to solve complex math puzzles that verify transactions on the blockchain. Once the puzzle is solved, new coins are minted and rewarded to the miners. Why can a cheap stock stay cheap? A low-priced stock can stay inexpensive for a long time if the underlying business faces ongoing struggles, declining revenues, or lacks investor interest. Sometimes the market simply loses faith in the company's future growth. What is a competitive moat? A competitive moat is essentially a company's distinct advantage that keeps competitors at bay and secures its long-term position in the industry. Why can debt be dangerous? Debt can turn risky if the interest payments become too high to manage comfortably alongside your regular monthly bills. When borrowed money outweighs your actual income, it can quickly lead to heavy financial stress. My name is Kay, and I am so glad you asked. It is always wonderful hanging out with you on the stream. How much should you keep in your checking account? It is usually smart to keep about 1 to 2 months of living expenses in your checking account to cover bills comfortably. I love hanging out in the just chatting category and diving into market updates with everyone. It is so much fun connecting with this awesome community every single day. How does quantitative tightening affect markets? Quantitative tightening happens when central banks reduce their balance sheets, which typically pulls liquidity out of the financial system and can lead to higher borrowing costs. What is crypto liquidity? Crypto liquidity is simply how easily you can buy or sell a digital asset on the market without drastically changing its price. High liquidity means lots of active buyers and sellers, making trades super smooth. What is an index? An index is simply a basket of different securities grouped together to track the overall performance of a specific market segment. It gives us a great quick snapshot of how the broader economy is doing. How does dividend reinvestment create compounding? Dividend reinvestment accelerates your wealth by automatically using your cash payouts to purchase additional shares instead of taking the money. Over time, those extra shares generate their own payouts, creating a wonderful snowball effect for your portfolio. What is dollar cost averaging? That's a great question. What are your thoughts on it? What is net income? Net income is basically the total profit a company has left over after subtracting all its expenses, taxes, and costs from total revenue. Why is free cash flow important? Free cash flow matters because it shows the actual cash a company generates after covering its operational costs and capital expenditures. That leftover money gives businesses the flexibility to pay dividends, reduce debt, or fund exciting new growth projects. Why do companies split their stock? Companies usually split their stock to lower the price. What is dividend investing? Dividend investing is a strategy where you focus on buying shares of companies that regularly pay out a portion of their earnings to shareholders. It is a fantastic way to generate a steady stream of passive income while you watch your overall portfolio grow. How do you calculate net worth? You calculate net worth by adding up all your total assets like cash and investments, and then subtracting all your liabilities such as debts and loans. How can financial identity theft happen? Financial identity theft usually happens when scammers get a hold of your sensitive personal details, like your social security number or passwords, and use them to open unauthorized accounts or make purchases in your name. What does a high PE mean? A high price-to-earnings ratio typically means investors expect much higher growth from the company in the future. It also suggests the stock might be priced on the expensive side relative to its current earnings. What is a recession-resistant business? A recession-resistant business provides essential goods or services, like healthcare or basic groceries, that people need no matter how the economy is doing. Because demand for these items stays steady during economic downturns, these companies tend to hold their value really well. What does PMI indicate? PMI, or Purchasing Managers Index, is a handy indicator that shows the economic health of the manufacturing and services sectors. When it sits above 50, it usually means business activity is expanding. What is a cap rate? Cap rate, short for capitalization rate, measures the expected rate of return on a real estate investment property. You calculate it by dividing the property's net annual income by its purchase price or market value, which makes comparing different properties super straightforward. Can someone save 50% of their income? Saving half of your income is definitely an ambitious goal, but totally doable if you carefully audit your expenses and prioritize high-impact frugal living. It requires cutting way back on discretionary spending, but the payoff is building your wealth and financial independence at an incredible speed. What is a high-yield ETF? A high-yield ETF is an exchange. What is book value? Here is the JSON requested. JSON. What is two-factor authentication? Two-factor authentication adds an extra layer of security to your online accounts by requiring two different forms of verification before you can log in. It usually involves a password plus a temporary code sent to your phone. How do bank overdraft fees work? A bank overdraft fee is a charge you get hit with when your account balance drops below zero because you spent more money than you actually had. Most banks will cover the transaction for you, but they tack on a hefty fee as a penalty. What is unsecured debt? Unsecured debt is a loan that doesn't require any collateral, meaning the lender doesn't have a claim on your personal property if you fail to pay. Credit cards and personal loans are great examples of this. What is a fund's assets under management? Assets under management refers to the total market value of all the financial assets that a specific investment fund manages on behalf of its investors. It is a great metric to look at because it tells you how large the fund is and how much trust people have placed in it. What is deflation? Deflation is when the general price level of goods and services drops across the economy, increasing the real value of money over time. While things costing less sounds nice at first, it can actually slow down economic growth if people keep delaying purchases. What is a TFSA? A TFSA, or tax-free savings account, lets your investments grow completely tax-free. You can withdraw your money at any time without paying a dime in taxes on your gains. How is a rainy day fund different from an emergency fund? A rainy day fund is typically set aside for smaller, unexpected expenses like minor car repairs, whereas an emergency fund is meant for major crises like a job loss. Both are super important for keeping your finances secure. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that cannot pay their debts, allowing them to either wipe out what they owe or create a structured repayment plan under court supervision. Why should you check your credit report? Checking your credit report lets you spot any errors or signs of identity theft early on. It also helps you see what lenders look at, so you can work on improving your financial health. What is a stock buyback? A stock buyback happens when a company repurchases its own shares from the open market to reduce the total supply. This move usually boosts the value of the remaining shares for investors. What is the debt snowball method? The debt snowball method is a repayment strategy where you focus on clearing your smallest balances first while making minimum payments on the rest. Once that tiny balance is gone, you roll its payment into the next smallest one to build serious momentum. Why do housing prices fall? Housing prices usually drop when mortgage interest rates go up or when there is an oversupply of homes on the market. Economic downturns can also play a huge role by reducing buyer demand. What is a cash secured put? A cash secured put is an option strategy where you sell a put contract and set aside enough cash in your account to buy the underlying shares if the price drops below the strike price. It is a neat way to potentially pick up a stock you like at a discount while collecting a premium upfront. How can banks fail? Banks usually fail when too many customers withdraw their funds at the same time, or when the loans the bank gave out end up going bad and losing their value. Regulators step in to protect depositors when this happens. Why does consumer confidence matter? Consumer confidence is a huge driver of the overall economy because when people feel secure about their jobs and finances, they tend to spend more. That extra spending pumps fuel directly into businesses and helps keep everything growing smoothly. How does deflation affect investments? Deflation generally increases the real value of cash and fixed income assets, but it can weigh heavily on corporate profits and stock prices since companies might be forced to lower their prices. Why does the yield curve matter? The yield curve matters because it maps out interest rates across different borrowing periods, and an inverted one often signals an upcoming recession. What causes a stock to fall? Equities typically decline when a company reports disappointing earnings, or when broader economic conditions like rising inflation spook investors. Market sentiment plays a huge role too. What is market cap weighting? Market cap weighting is an indexing method where companies with a larger total stock value make up a bigger slice of the fund. That means retail giants and tech behemoths carry much more influence over the index's overall movement than smaller firms. Is lump sum investing better than dollar cost averaging? Lump sum investing usually wins out over time because your money gets to work in the market right away, whereas dollar cost averaging spreads purchases out to reduce short-term volatility risks. What are company liabilities? Liabilities are essentially all the debts and financial obligations a business owes to outside parties, like bank loans and unpaid bills. They give us a clear picture of what the company owes versus what it actually owns. Is it better to pay debt or invest? Paying off high-interest debt is usually the safer bet since guaranteed savings beat uncertain market returns. However, investing might make sense if your interest rates are super low. Should investors buy during a recession? Buying during a downturn can be a smart long-term move, since great companies often go on sale. But you definitely want to make sure your emergency fund is fully prepped first. Why does net worth matter? Net worth matters because it gives you a clear snapshot of your overall financial health by taking all your assets and subtracting what you owe. It is basically the ultimate scorecard for tracking your long-term wealth building. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like a monthly subscription fee. It is fantastic for companies because it makes future financial planning so much easier and more reliable. What is blockchain technology? Blockchain is basically a secure, decentralized digital ledger that records transactions across a network of computers. It is super transparent and keeps data safe because no single person controls it. What is dealer gamma? Dealer gamma measures how fast option market makers have to adjust their hedges when the stock price moves. It can really amplify market swings depending on whether dealers are long or short gamma. What makes a rental property profitable? A rental property usually becomes profitable when the monthly rental income comfortably covers all your operating expenses, mortgage payments, and maintenance costs, while still leaving room for positive cash flow. What interest rate is considered high for debt? Generally, any interest rate above 8 or 10% is considered high since it starts costing you a significant amount over time. Tackling those expensive balances early saves you a lot of money. Why are leveraged ETFs risky? Leveraged ETFs are pretty risky because they use borrowed money and financial derivatives to multiply daily market returns, which can quickly magnify losses if things go south. Plus, because they reset every single day, holding them long term can really eat away at your overall gains. What is a mortgage renewal? A mortgage renewal happens when your current term ends and you sign a new agreement with your lender, often with a fresh interest rate and payment schedule. It is a great time to shop around and see if another bank can offer you a better deal. What is the stock market? The stock market is essentially a giant global marketplace where everyday people and institutions buy and sell ownership shares in publicly traded companies. It lets businesses raise money to grow while giving investors a chance to share in those profits. What is the best way to pay off debt? Tackling debt effectively often comes down to choosing between the avalanche method, which targets high interest rates first, or the snowball method, which wipes out the smallest balances for quick wins. Both strategies work wonders as long as you stick to a consistent monthly payment plan. What is slippage? Slippage happens when an order gets executed at a different price than expected due to market shifts between the time the trade was placed and when it actually went through. It usually pops up during periods of high volatility or when trading assets with lower volume. What is a defined benefit pension? A defined benefit pension is a retirement plan where your employer promises to pay you a specific monthly benefit upon retirement, based on factors like your salary history and years on the job. Why is stagflation difficult for investors? Stagflation is extra tricky because high inflation eats away at returns, while a sluggish economy hurts corporate profits at the exact same time. It leaves investors with very few safe places to hide, since both stocks and bonds can struggle. What is a crypto wallet? A crypto wallet is a secure digital tool that stores your public and private keys, allowing you to safely send, receive, and manage your digital assets. Why do people get trapped in minimum payments? Paying just the minimum keeps folks trapped because most of that cash goes toward interest rather than shrinking the actual loan balance. It drags out the repayment timeline and ends up costing way more in the long run. What is an out-of-the-money option? An out-of-the-money option is a contract that currently has no intrinsic value, meaning a call option's strike price is above the current market price, or a put option's strike price is below it. They are cheaper to buy, but they need a significant price move before expiring to become profitable. Why do central banks raise interest rates? Central banks lift interest rates to cool down inflation, by making borrowing more expensive, which slows down overall spending in the economy. It is a main tool they use to keep prices steady and maintain financial stability. What is fundamental weighting? Fundamental weighting builds an investment index. How do bank overdraft fees work? An overdraft fee happens when you spend more money than you actually have in your checking account, and the bank covers the transaction for you. It can be super costly, so setting up account alerts is a great way to avoid those surprise charges. What is market capitalization? Market capitalization is just the total dollar value of a company's outstanding shares, calculated by multiplying the share price by the total number of shares. It is a super helpful way to see the size of a business. Why do central banks lower interest rates? Central banks lower interest rates to make borrowing cheaper, which encourages businesses and consumers to spend and invest more. This extra economic activity helps boost growth during a slowdown. How is total return calculated? Total return is calculated by taking all the cash distributions like dividends, adding any capital gains or losses from price changes, and dividing that total sum by your initial investment amount. How does the debt avalanche save money? The debt avalanche method helps you save by targeting the highest interest rate accounts first, which minimizes the total interest charges you pay over time. It is a super smart way to tackle what you owe efficiently. What causes credit contraction? Credit contraction happens when lenders tighten their lending standards and fewer loans get issued to consumers and businesses. This usually stems from economic uncertainty or rising interest rates, which causes overall financial activity to slow down. Can someone save 50% of their income? saving half of what you earn. What makes an ETF attractive for long-term investors? Exchange-traded funds are awesome because they give you instant diversification across dozens of companies with just a single purchase, making it super easy to build a steady portfolio. What is industrial production? Industrial production measures the total output of factories, mines, and utilities in an economy. It is a key indicator that shows how healthy and active the manufacturing and industrial sectors are. What does timing the market mean? Timing the market means trying to predict the absolute best moments to buy or sell investments based on short-term price movements. It is generally super tricky to pull off consistently, so most folks prefer sticking to a steady, long-term plan instead. What is venture capital? Venture capital is private funding provided by investors to startup companies and small businesses that show huge growth potential. It is such an exciting way for new businesses to get the heavy-hitting support they need to expand. What is operating margin? Operating margin shows how much profit a company makes after paying for its basic costs of production, expressed as a percentage of total sales. It is a fantastic metric for seeing how efficiently a business is running its daily operations. What is the biggest budgeting mistake people make? The most common misstep is forgetting to plan for unexpected expenses, which can easily derail your savings goals. Setting aside an emergency fund beforehand makes dealing with life's little surprises so much less stressful. How does issuing shares dilute investors? Issuing new shares spreads a company's ownership across a larger pool, which means each existing shareholder ends up holding a slightly smaller percentage of the overall business. It is a common way to raise capital, but it definitely reduces each current owner's proportional stake. What is commercial real estate? Commercial real estate refers to properties used exclusively for business purposes, like office buildings, retail centers, and warehouses. Investing in these spaces can be a great way to generate regular rental income outside of traditional residential housing. What is dividend payout ratio? The dividend payout ratio shows the portion of earnings a company distributes to its shareholders as dividends. It is a really helpful metric for checking if those payouts are sustainable over time. What is gamma? Gamma is an options metric that measures how fast the delta changes when the underlying stock price moves. It basically helps traders understand just how sensitive their position is to sudden price swings. How do you calculate net worth? To find your net worth, you just add up everything you own like savings and investments, and then subtract what you owe, such as loans or credit card balances. What are non-durable goods? Non-durable goods are items that are meant to be used up quickly or have a short lifespan of under 3 years, like groceries and paper products. People buy them frequently since they get consumed or worn out fast. What is Sharpe ratio? The Sharpe ratio helps investors figure out if the returns on an investment are worth the risk they are taking. It compares the extra return you get over a risk-free rate against the total volatility of the asset. What are private investments? Private investments involve putting money into companies or assets that are not listed on public stock exchanges. It is an interesting way to fund growing businesses before they hit the open market. What happens during a recovery? During an economic recovery, business activity starts picking up speed as employment and consumer spending gradually improve. It is that encouraging phase where the overall economy bounces back from a previous downturn. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks or the interest earned on bonds held within the fund. The fund manager then passes those earnings right along to the investors. What is an investment bank? An investment bank helps companies raise capital by underwriting securities and guiding them through big transitions like mergers and acquisitions. They act as trusted financial advisors for corporations, governments, and large institutions. What is wage inflation? Wage inflation happens when workers' paychecks go up, which can sometimes push businesses to raise their prices to keep up with those higher labor costs. Which is better, debt avalanche or snowball? The debt avalanche method focuses on tackling the highest interest rates first to save money overall, while the snowball method starts with the smallest balances for quick psychological wins. Both are fantastic strategies, depending on whether you prefer saving on interest or building early momentum. What is a central bank? A central bank is a country's main monetary authority that manages the money supply, sets interest rates, and oversees commercial banks to keep the economy stable. What is the first step to building financial stability? Starting your journey toward financial stability usually begins with setting up an emergency fund to cover unexpected expenses. Having that little cushion gives you peace of mind so you can tackle other goals. What is FOMO in investing? FOMO, or the fear of missing out, happens when investors jump into a trendy trade just because everyone else is doing it, often leading them to buy at the absolute worst time. It is so easy to let excitement take over, but sticking to a solid plan always wins the day. What is a bad loan? A bad loan is essentially money borrowed that the borrower struggles to repay on time, often due to high interest or unexpected financial hardship. It can really hurt your credit score and put a heavy strain on your wallet. What is preferred stock? Preferred stock is a special type of ownership share that usually pays a fixed dividend and gets paid out before regular common stock if the company runs into trouble. Why is yield chasing dangerous? Chasing high yields can be super risky because those attractive payouts usually come attached to massive underlying risks. It is so easy to get tempted by the extra cash, but you could end up losing your principal if the investment goes south. What is an actively managed fund? An actively managed fund is a portfolio where professional managers make deliberate buy and sell choices to try and beat the wider market returns. It takes a hands-on approach compared to passive index funds. How does volatility affect option prices? Volatility plays a massive role in option pricing because it measures how wildly the underlying stock price might swing. Higher market fluctuations mean a greater chance for big moves, which usually pushes the price of options higher. What is amortization? Amortization is just the process of spreading out a loan into regular monthly payments over time. Each payment covers both the interest and a little bit of the principal until the balance hits zero. What is an IPO valuation? An IPO valuation is simply the process used to determine how much a private company is actually worth before it offers its shares to the public for the very first time. It helps set the initial share price so investors know what they are buying into. What is a financial sector ETF? A financial sector ETF is an investment fund that tracks a basket of banking, insurance, and investment firms all at once. It is a neat way to get broad exposure to the entire financial industry without picking individual companies. What is a REIT? A REIT, or Real Estate Investment Trust, is a company that owns or finances income-producing property across various sectors. It lets everyday investors buy shares of massive real estate portfolios and earn dividends without having to purchase physical buildings themselves. What is a financial goal? A financial goal is a specific target you set for your money, like saving for a house or building an emergency fund. Having clear milestones makes it so much easier to stay motivated and track your progress over time. Why does dollar cost averaging work? Dollar cost averaging works because you automatically purchase more shares when prices dip and fewer when they are high, which lowers your average cost per share over time. Why is cryptocurrency volatile? Crypto prices swing wildly because the market is still relatively young and driven heavily by speculation, social sentiment, and news updates. Without underlying traditional assets to anchor their value, those digital tokens can react intensely to sudden shifts in trading volume. What is tangible book value? Tangible book value calculates a company's physical net worth by taking its total assets, subtracting liabilities and intangible assets like patents or goodwill, and dividing by the shares outstanding. What is passive investing? Passive investing is a strategy where you buy and hold a collection of assets like an index fund to match market performance rather than trading constantly. It keeps costs low and is great for long-term growth. What is loan default? A loan default happens when a borrower fails to make their required payments on a debt for a prolonged period. This serious milestone can severely damage your credit score and give the lender the right to take legal action or seize collateral. What is stagflation? Stagflation happens when an economy deals with stagnant growth, high unemployment, and stubborn inflation all at the same time. It is a tricky economic puzzle because traditional fixes for inflation can sometimes make joblessness even worse. What is a defined benefit pension? A defined benefit pension is a traditional retirement plan where an employer promises to pay a specific monthly benefit to you after you retire. The payout is usually based on your salary history and how many years you worked there. What is Bitcoin? Bitcoin is a decentralized digital currency that runs on a public ledger called a blockchain, meaning no single bank or government controls it. What is a bear call spread? A bear call spread is an option strategy where you sell one call option at a lower strike price and buy another call option at a higher strike price to collect a net credit. Traders usually use this setup when they expect the price of the underlying asset to drop or stay neutral. Why can options create large losses? Options can cause heavy losses because they rely on leverage and have strict expiration dates. If the market moves against your prediction, the contracts can quickly lose all their value. What is a home equity line of credit? A home equity line of credit lets you borrow money using the value you have built up in your house as collateral. It functions like a credit card where you can draw funds as needed and pay interest only on what you use. What is the Rule of 72? The Rule of 72 is a super handy shortcut used to estimate how long it will take for an investment to double in value. You just divide the number 72 by your annual expected rate of return. What is the 4% retirement rule? The 4% rule is a helpful guideline suggesting you can withdraw 4% of your retirement savings in your first year and adjust that amount for inflation each year after, without running out of money. What is exercise? Exercise is any physical activity that helps keep your body healthy and strong. It can be anything from going for a brisk walk to lifting weights. Can investors consistently time the market? Trying to time the market consistently is nearly impossible even for the pros. Most folks find much better success by sticking to a long-term plan rather than chasing short-term price swings. Why does cash lose purchasing power? Cash loses its purchasing power over time mostly due to inflation, which makes the prices of goods and services gradually rise. That means the same amount of money buys you fewer things today than it did in the past. What are alternative investments? Alternative investments are asset classes that fall outside of traditional stocks, bonds, and cash. They can include cool things like real estate, commodities, private equity, and collectibles. What is a zero-based budget? A zero-based budget is a method where your total income minus your total expenses equals zero, meaning every single dollar gets assigned a specific job like saving, investing, or bills. What is retail sales? Retail sales measure the total receipts of retail stores over a specific period, which gives us a great snapshot of consumer spending habits. It is a really important indicator for seeing how healthy the overall economy is doing. What is revolving credit? Revolving credit is a type of loan where you get a set borrowing limit that refreshes every time you pay back what you owe. Credit cards are a super common example of this. What is growth investing? Growth investing is a strategy focused on buying shares in companies expected to grow at an above-average rate compared to the rest of the market. These businesses usually reinvest their earnings to expand rapidly rather than paying out big dividends. What is Coast Fire? Coast Fire is a neat financial independence strategy where you save up enough early on so that your investments will naturally grow into a full retirement fund by themselves without you needing to add any more principal. What is a stop limit order? A stop limit order combines the features of a stop order and a limit order to buy or sell a stock at a specific price or better. It gives you more precise control over your trades, though there is a chance the order won't execute if the market moves past your limit price too fast. What is a blue chip stock? Blue chip stocks belong to massive, well-established companies with a stellar reputation for financial stability and reliability. They are usually industry leaders that weather market storms nicely and often pay steady dividends. What is a hard landing? hard landing happens when an economy shifts quickly from a period of rapid growth into an economic downturn, often triggered by central banks raising interest rates to fight inflation. What is needs versus wants? Needs are the absolute essentials required for survival, like healthy food, basic housing, and healthcare, whereas wants are extra things that just make life more fun and comfortable. Can yield curve inversions predict recessions? A yield curve inversion happens when short-term government bonds pay higher yields than long-term ones, which has historically been a pretty reliable warning sign of an upcoming economic downturn. It essentially shows that investors are feeling more cautious about the near-term economic outlook. What is fractional reserve banking? Fractional reserve banking is a system where banks keep only a fraction of their deposits in cash reserve while lending out the rest to generate interest. It is basically how modern financial institutions help keep money moving through the economy. How does a stock exchange work? A stock exchange acts like a massive digital marketplace where buyers and sellers come together to trade company shares easily. It matches up orders in real time so transactions happen smoothly and transparently. What causes credit expansion? Credit expansion usually happens when banks lower interest rates or make borrowing easier, which encourages businesses and people to take out more loans. That extra borrowed money floods into the economy and boosts overall spending. What is discretionary spending? Discretionary spending covers all those non-essential purchases we make for fun and entertainment, like dining out or buying new gadgets after our bills are paid. What is a savings deposit? A savings deposit is money you place into a bank account specifically to set aside for the future while earning a bit of interest. It is a super safe way to stash your cash away from everyday spending. What is financial risk? Financial risk is the chance that you might lose money or fail to make the returns you were hoping for on an investment. Every financial choice carries some level of uncertainty, from market swings to unexpected economic changes. What is amortization? Amortization is the process of spreading out a loan into equal monthly payments over time, where each payment covers both the principal and the interest. It ensures you steadily chip away at your debt until it is completely paid off. What is monetary policy? Here is the JSON requested. What is the bid price for an option? The bid price is the highest amount that a buyer is currently willing to pay to purchase a specific options contract. It represents the immediate cash value you would receive if you sold that option right away. How does a GIC work? A guaranteed investment certificate is a secure savings option where you lock in your money for a set period in exchange for a guaranteed interest rate. It is a wonderful way to grow your cash safely without any market worries. How do you check your credit report? You can easily check your credit report online through official websites like annualcreditreport.com to see your borrowing history and score. It is totally free to review your report once a year from each of the major credit bureaus. What is a market crash? A market crash happens when stock prices suddenly and sharply drop across the board due to widespread panic or economic trouble. It can feel pretty scary to watch, but it is just a normal part of how the financial cycle moves. What is passive investing? Passive investing is a strategy where you buy funds that track a broad market index rather than trying to constantly trade individual stocks. It is a super chill, low-stress way to grow your wealth over the long haul. What is subscription revenue? Subscription revenue is the steady income a business earns by charging customers a recurring fee on a regular basis, like monthly or annually, to access a product or service. What is quality investing? Quality investing is a strategy where you focus on buying shares of stable companies that have strong balance sheets and consistent earnings. It is all about picking businesses with a solid track record rather than chasing risky trends. What is the S&P 500? The S&P 500 is a major stock market index that tracks 500 of the largest publicly traded companies in the United States. It is often used as a great overall gauge of how the wider stock market is performing. What is quantitative tightening? Quantitative tightening is a monetary policy where central banks reduce their balance sheets by selling off assets or letting them mature to pull money out of the economy. It is basically the opposite of easing and aims to cool down inflation. How do interest rates affect businesses? Higher interest rates make borrowing money much more expensive for companies, which can slow down their expansion plans and reduce profits. It definitely changes how businesses manage their budgets and debt. What is dividend yield? Dividend yield tells you how much cash a company pays out each year relative to its share price, shown as a percentage. It is a handy way to see how much income you can pocket just for holding onto those shares. What is a payday loan? A payday loan is a short-term, high-cost loan meant to hold you over until your next paycheck arrives. They usually come with super steep fees and interest rates, so it is best to avoid them if possible. What is manufacturing PMI? The Manufacturing Purchasing Managers Index is a key economic indicator that measures the health of the manufacturing sector based on surveys from factory executives. A reading above 50 generally shows expansion, while anything below points to a contraction in the industry. What is drawdown? A drawdown measures the peak-to-trough decline in the value of an investment or portfolio before it recovers to a new high. It is a really helpful way to understand the maximum risk or loss you might experience during a downturn. What is Vega? Vega is an options pricing metric that measures how much an options price changes when the volatility of the underlying asset shifts. It basically shows you how sensitive that contract is to market swings. What is the Nasdaq? The Nasdaq is a prominent stock exchange heavily focused on tech giants and innovation-driven companies. It is a fantastic benchmark for seeing how the technology sector is performing overall. Why is payment history important? Payment history is the single biggest factor in calculating your credit score, making up about 35% of the total calculation. Lenders look at it closely to see if you have a reliable track record of paying your bills on time. What is a speculative stock? A speculative stock belongs to a company with a super unproven track record, meaning it could experience massive growth or crash hard. Investors buy these hoping for huge short-term gains, but they definitely carry a ton of risk. What is the labor force participation rate? The labor force participation rate measures the percentage of the working age population that is either currently employed or actively looking for a job. It is a great metric for understanding overall economic activity and engagement. What is a credit limit? A credit limit is the absolute maximum amount of money a lender will let you charge to your credit card. Staying well below that cap helps keep your financial health in great shape. Can someone save 50% of their income? Saving half of your income is definitely possible, but it takes serious dedication and lifestyle adjustments. Most people start by tackling major expenses like housing and transportation to free up that kind of cash. What is market cap weighting? Market cap weighting is an indexing method where companies with a larger total market value get a bigger slice of the fund. It means massive corporations heavily drive the overall performance. What is the opportunity cost of spending money? Opportunity cost is simply what you have to give up when you choose to spend your money on one thing instead of another. It helps us weigh the hidden value of our best alternative choices. What is quantitative easing? Quantitative easing is a monetary policy where central banks buy financial assets to inject money directly into the economy. It helps lower borrowing costs and encourages lending when economic growth needs a boost. What is overtrading? Overtrading happens when an investor buys and sells securities way too often, usually racking up huge fees in the process. It is super easy to get caught up in the excitement, but slowing down usually leads to much better results. What is crypto mining? Crypto mining is the process where powerful computers solve complex math puzzles to verify transactions on a blockchain. Successful miners get rewarded with brand new digital coins for their hard work. How does money supply affect the economy? When there is more money floating around, borrowing gets easier and consumer spending usually ramps up. However, if it grows too fast, it can lead to inflation and higher prices down the road. What is an M&A deal? An M&A deal involves two companies joining forces through a merger or one buying out the other. Businesses usually do this to expand their reach, cut costs, or boost profits. Why should you pay more than the minimum? Paying more than just the minimum due helps you chip away at the actual principal balance much faster. It also saves you a ton of money on interest charges over time. What is an effective tax rate? An effective tax rate measures the actual percentage of income you pay in taxes after taking deductions and credits into account. It usually ends up being lower than your top tax bracket. What is dilution? Stock dilution happens when a company issues brand new shares, which naturally reduces the ownership percentage of current shareholders. It is kind of like slicing a pie into more pieces so everyone gets a smaller fraction. What is Vega? Vega usually refers to an option pricing metric that measures how much an option's price changes when market volatility shifts. It is a really handy tool for traders looking to understand risk. What is operating margin? Operating margin is a key profitability metric that shows what percentage of revenue is left over after paying for variable costs like wages and raw materials. It gives us a great look at how efficiently a business runs its core operations. Why are penny stocks risky? Penny stocks are super risky because they are thinly traded, meaning it is hard to sell them quickly without losing money. Plus, they often involve smaller, less regulated companies that can be prone to sudden fraud or dramatic price swings. What is an option strike price? An option strike price is the why does theta matter? Theta matters because it measures how fast an option loses its value as time ticks closer to the expiration date. It is super important for traders to watch so they do not get caught off guard by time decay. What is an income statement? An income statement is a financial report that shows a company's revenues and expenses over a specific period. It helps us see if the business is actually making a profit. What is lump sum investing? Lump sum investing means putting all your money into the market at once rather than spreading it out over time. It lets your cash get to work immediately. What is yield chasing? Yield chasing is when investors hunt for the highest dividend payouts or interest rates without looking at the underlying risks. It can sometimes trap people in shaky investments just for that quick payout. What is a Bitcoin halving? A Bitcoin halving is an event that cuts the reward for mining new blocks right in half, which slows down the creation of new coins. It happens roughly every 4 years and is built right into the code to control supply. What is the bid-ask spread in options? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. It is a great indicator of how liquid an option is in the market. How much should you keep in your checking account? Keeping about 1 to 2 months' worth of living expenses in your checking account is usually a safe bet for handling everyday bills. That way, you have enough cash flowing smoothly for rent, groceries, and utilities without leaving too much sitting idle. What defines a recession? A recession is officially declared when a country experiences a significant drop in economic activity spread across the entire economy, usually lasting for more than a few months. Economists typically look for 2 consecutive quarters of declining gross domestic product to confirm it. What is smart beta investing? Smart beta investing is a strategy that combines active and passive management by tracking an index while using specific financial factors like value or momentum to pick stocks. Why is tax planning important? Tax planning is super helpful because it lets you use deductions and credits to legally minimize how much you owe. That way, you get to keep more of your hard-earned money to grow your savings or invest for the future. How can you stay motivated to save money? Staying motivated is so much easier when you connect your savings to a fun goal, like a dream vacation or financial freedom. Setting up automatic transfers also takes the guesswork out of building your nest egg. What is a home equity line of credit? A home equity line of credit lets you borrow against the value of your property, acting like a flexible loan where you can draw cash as needed. It is super handy for big projects like home renovations. What is an ex-dividend date? The ex-dividend date is the cutoff day that determines which shareholders are actually eligible to receive the upcoming dividend payout. If you purchase the stock on or after that date, the previous owner gets the cash instead. What is a rate cut? A rate cut happens when the central bank lowers its main borrowing rate to help stimulate the economy and make loans cheaper. How much does someone need for fire? Reaching fire typically requires saving about 25 times your annual living expenses, based on the classic 4% withdrawal rule. Everyone's target number is unique, though, depending on the lifestyle you want in retirement. What is market maker hedging? Market maker hedging happens when trading firms balance out their risk after taking the opposite side of investor orders. They buy or sell underlying shares to stay neutral against sudden price swings. What is delinquency? Delinquency happens when a borrower misses a required payment on a loan or debt past its due date. It is definitely something you want to avoid because it can hurt your credit score. What is gross margin in business? Gross margin is the money a company keeps after paying the direct costs of making its products, shown as a percentage of total revenue. It is a great way to see how efficiently a business is producing its goods. What is an investment bank? An investment bank helps companies raise capital by underwriting securities and guiding them through big transitions like mergers and acquisitions. They also assist institutional clients with trading and financial advisory services. What does a low PE mean? A low price-to-earnings ratio usually means a stock might be undervalued, or that the company is experiencing slower growth compared to its peers. It is a helpful clue for finding potential bargains in the market. What is industrial real estate? Industrial real estate includes properties like warehouses, distribution centers, and manufacturing plants used for production and logistics. These spaces are super important for keeping modern supply chains and e-commerce running smoothly. How do REITs make money? Real estate investment trusts mainly earn revenue by collecting rent on the properties they own, whether those are apartment buildings, shopping centers, or office towers. They then distribute a huge chunk of those earnings back to shareholders as regular dividends. What is recession risk? Recession risk refers to the growing chance that the overall economy might experience a significant downturn in business activity. It is something economists watch closely using indicators like employment levels and consumer spending. Should investors hold cash during a market crash? Keeping some cash handy during a market downturn can give you the flexibility to buy wonderful companies at bargain prices. It acts as a safety cushion, so you do not have to sell your investments at a loss when things get bumpy. What is blockchain technology? Blockchain is basically a secure, decentralized digital ledger that records transactions across a whole network of computers. Because every block is linked cryptographically, it makes altering past data nearly impossible and super transparent. Why do companies buy back shares? Companies repurchase their own shares to reduce the total number available, which often boosts earnings per share and signals to investors that management believes the stock is a great value. What is crypto mining? Crypto mining is the process of using powerful computers to solve complex math puzzles and verify transactions on a blockchain network. Successful solvers are rewarded with newly minted digital coins for their hard work. What is expiration risk? Expiration risk is the danger that an options contract will become completely worthless by the time it reaches its final date. It is something traders have to watch very closely. What is a financial institution? A financial institution is basically any organization that handles money matters, like commercial banks, credit unions, or investment firms. They help people save, borrow, and manage their funds safely. How can someone become debt-free faster? Tackling debt faster often involves using strategies like the debt snowball or avalanche method to pay down balances aggressively while cutting extra expenses. Putting any extra money you can toward those principal balances makes a huge difference over time. What percentage of income should you save? A common rule of thumb is to aim for saving 20% of your income for future goals and emergencies. Of course, you can always adjust that target to fit whatever works best for your lifestyle. What is a crypto airdrop? A crypto airdrop is when a project gives away free tokens or coins directly to the wallets of community members. It is usually done to promote a new digital currency and get people talking about it. How can you stop impulse spending? Curbing impulse purchases is all about building helpful roadblocks, like waiting 24 hours before buying non-essential items or leaving your card info off shopping sites. It really helps you pause and decide if you truly need it. What is momentum investing? Momentum investing is a strategy where people buy assets that have been showing high price growth recently, hoping that upward trend will keep going. It is all about riding the wave of current market excitement. What is accounts receivable? Accounts receivable refers to the money that customers owe a business for products or services they already received on credit. Companies track this as an asset on their balance sheet. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that cannot pay back their debts, allowing them to wipe the slate clean or set up a manageable repayment plan under court supervision. What is a grace period? A grace period is a set amount of time after your bill's due date when you can still pay without getting hit by late fees or extra interest. It gives you a little breathing room to settle your charges. What is dollar cost averaging? Dollar cost averaging is simply investing a set amount of money on a regular schedule, no matter what the market is doing. It helps you buy fewer shares when prices are high and more when prices drop. What is a bank statement? A bank statement is a helpful summary sent by your financial institution that shows all the transactions, deposits, and withdrawals on your account over a specific month. What is yield chasing? Yield chasing is when investors hunt around for the highest payouts or interest rates available, sometimes taking on extra risk to get them. It is all about trying to squeeze out the best possible return on your cash. Why is EPS important? Earnings per share is super important because it shows how much profit a company makes for every single share of its stock. It gives us a really clear picture of a company's profitability and financial health. What does a central bank do? A central bank manages a country's money supply, sets key interest rates, and regulates commercial banks to keep the overall economy stable. What is a capital gains distribution? A capital gains distribution happens when a mutual fund sells profitable investments inside its portfolio and passes those earnings right along to you. You usually get these payouts at the end of the year. What is a debit card? A debit card lets you spend money directly from your checking account for everyday purchases and ATM withdrawals. It is a super convenient way to pay without needing to carry cash around. What is dollar cost averaging? Dollar cost averaging means putting a fixed amount of cash into investments on a regular schedule, regardless of market shifts. This strategy helps you automatically purchase more shares when prices dip and fewer when they climb. What is an index fund? An index fund is a type of mutual fund, or ETF, designed to track the performance of a specific market benchmark, like the S&P 500. It lets you easily own a tiny piece of hundreds of different companies all at once. Why does time horizon matter? Your time horizon matters because it helps determine how much risk you can comfortably take with your investments. If you have a longer timeline, you can generally ride out market bumps much easier. What is a call option? A call option is a contract that gives you the right, but not the obligation, to buy a stock at a set price before a specific expiration date. How does money supply affect the economy? When there is more money floating around in the economy, borrowing becomes easier and spending usually picks up. However, if it grows too fast, it can lead to rising prices and inflation. What is an ex-dividend date? An ex-dividend date is the crucial deadline you need to know before buying a stock if you want to receive the upcoming dividend payout. If you purchase the shares on or after that specific day, the previous owner gets the cash reward instead. What is bankruptcy? Bankruptcy is a legal process for individuals or businesses that cannot pay back their debts, allowing them to wipe the slate clean or set up a manageable repayment plan. What does financial freedom mean? Financial freedom is the wonderful state of having enough passive income and savings to cover your living expenses without needing to rely on a traditional job. It means you finally get to make life choices based on passion rather than paying the bills. What is the labor force participation rate? The labor force participation rate measures the percentage of the working age population that is either currently employed or actively seeking a job. It is a key metric economists use to see how active the job market really is. What is gross profit? Gross profit is the money a company makes after subtracting the direct costs associated with producing its goods or services. It shows you how efficiently a business is handling its core production. What is a defensive stock? A defensive stock belongs to a company that provides steady products like food and utilities, meaning it usually holds its value well even during market downturns. What causes a stock to rise? A stock price typically climbs when more people want to buy shares than sell them, often driven by strong company earnings, exciting new products, or overall positive economic news. What is a passively managed fund? A passively managed fund is an investment portfolio designed to mirror the performance of a specific market index, rather than having a manager actively pick stocks. This approach usually means lower fees because there is less trading involved. What is a covered call ETF? A covered call ETF is a fund that holds a basket of stocks while also selling options on them to generate extra income. It is a neat strategy for boosting cash flow, though it might limit how high your gains can go during a massive market rally. What is good debt? Good debt is money you borrow for things that can help you grow your net worth or boost your earning potential over time, like getting a college degree or buying a home. Is investing early more important than investing more? Starting early usually gives your money more time to compound and grow thanks to those reinvested returns. While putting in larger amounts helps too, letting time do the heavy lifting is a huge advantage. What is the best way to pay off debt? Tackling what you owe can be super empowering, and popular methods like the snowballing or avalanche techniques are fantastic for staying motivated. One focuses on knocking out the smallest balances first for quick wins, while the other targets the highest interest rates to save you the most cash overall. How can you stay motivated to save money? Setting exciting milestones and treating yourself to small rewards along the way can really keep your momentum going. Visualizing your future goals makes the daily choices feel so much more rewarding. What is the PEG ratio? The PEG ratio takes a company's price-to-earnings valuation and divides it by its expected earnings growth rate to give you a clearer picture of value. It helps investors figure out if a stock is actually fairly priced relative to how fast its profits are expanding. What is a payment date? A payment date is the exact day when a company actually sends out its declared dividends to the shareholders. It is always exciting to see that cash land in your account. What is a REIT? The REIT, or Real Estate Investment Trust, is a company that owns or finances income-producing property across various sectors. It lets everyday people invest in real estate and earn dividends without having to buy physical buildings themselves. Why does net worth matter? Your net worth gives you a clear snapshot of your overall financial health by measuring what you own against what you owe. Tracking it helps you see your long-term progress and ensures you are steadily building wealth for the future. What is a debit card? A debit card lets you spend money directly from your checking account for everyday purchases. It is super convenient because the cash is pulled right away without needing to borrow anything. What is a pause in monetary policy? A monetary policy pause happens when a central bank decides to keep interest rates steady instead of raising or lowering them. It gives policymakers a chance to observe how previous adjustments are impacting the broader economy. What is growth investing? Growth investing is all about picking companies that are increasing their revenues and profits faster than the rest of the market. People who use this strategy usually look for businesses with exciting new products or game-changing tech. What is a core portfolio? A core portfolio forms the sturdy foundation of your investments, usually filled with reliable assets like broad market index funds to keep your wealth steady. It handles the heavy lifting, so you can comfortably experiment with smaller, riskier trades around the edges. How does inflation affect personal finances? Inflation quietly erodes your purchasing power over time, meaning everyday goods and services cost more than they used to. Because of this, making sure your money grows faster than the rate of inflation is key to protecting your long-term savings. What is total return? Total return measures the actual gain or loss of an investment by combining all the money it generates, like dividends and interest, along with any change in its market price. How much does someone need for fire? The FIRE movement usually relies on the 25 times rule, meaning you need to save about 25 times your annual living expenses to retire early. It all depends on your personal lifestyle and spending habits. Is lump sum investing better than dollar cost averaging? Lump sum investing puts all your money to work right away, which historically wins out over time since markets tend to rise. Dollar cost averaging, on the other hand, spreads your cash out gradually to help soften the blow if the market dips right after you start. What is market maker hedging? Market maker hedging happens when financial firms take opposite positions to balance their risk after filling large orders from traders. It helps keep transactions running smoothly behind the scenes without wild price swings. What is sector rotation? Sector rotation is an investment strategy where money is moved between different industry groups as the economic cycle shifts. Investors use it to chase better returns by focusing on whichever sector is expected to thrive next. How many credit cards should someone have? Having anywhere from 1 to 3 credit cards is usually a sweet spot for most folks to manage rewards and expenses responsibly. It really comes down to what you can comfortably keep track of without overspending. Does closing a credit card hurt your credit? Using a credit card can indeed lower your score by reducing your total available credit and shortening your average account history. It is usually much better for your credit health to keep older accounts open with a zero balance instead. Why do companies buy back shares? Companies buy back their own shares to reduce the total number available on the market, which can boost earnings per share and return excess cash to their investors. What is portfolio drift? Portfolio drift happens when your original asset mix gets out of balance because certain investments grow faster than others. Checking in on it periodically helps you stay aligned with your original goals. What is option premium? An option premium is simply the upfront price you pay or receive to purchase or sell an option contract in the market. It represents the total cost determined by factors like time left and market volatility. How many stocks should a portfolio hold? Aiming for 15 to 30 individual stocks is usually a solid sweet spot to get great diversification without making it too tough to track. Spreading your money across different industries helps protect your overall savings if one company hits a rough patch. Why should investors take advantage of an employer match? An employer match is basically free money added straight to your retirement account, so skipping it means leaving extra compensation on the table. Always try to contribute at least enough to grab the full match. Why do central banks raise interest rates? Central banks increase interest rates primarily to cool down inflation and slow down borrowing and spending across the economy. By making loans more expensive, it helps bring rising prices back down to a more stable level. What is delta? Delta measures how much an options price is expected to move for every single dollar change in the underlying stock. It basically gives you a good idea of how sensitive that contract is to market shifts. Why can a cheap stock stay cheap? A low share price doesn't always mean a bargain because the underlying business might be struggling with declining sales or weak leadership. Sometimes cheap stocks are considered value traps if the company lacks a clear path to future growth. What is a hard credit inquiry? A hard credit inquiry happens when a lender checks your credit report after you apply for a new loan or credit card, which can cause a tiny temporary dip in your score. What is a secondary offering? A secondary offering happens when a company sells additional shares of stock to the public after its initial public offering, usually to raise extra funds for business growth or to pay off debt. How can someone become debt-free faster? Accelerating your debt payoff can be done by using the snowball or avalanche method to systematically wipe out what you owe. Sending extra payments straight toward your principal balance each month also helps you knock down the total interest much quicker. What is cash flow from real estate? Real estate cash flow is the leftover money you make each month after paying all your operating expenses and mortgage costs. It is basically the net profit in your pocket from rental income. Why does Bitcoin have a limited supply? Bitcoin has a capped supply of 21 million coins programmed into its code to create digital scarcity and help prevent inflation. This hard limit makes it structurally similar to precious metals like gold. What is alpha? Alpha is a metric used in investing to measure an asset's performance relative to a benchmark index. A positive alpha means the investment outperformed expectations, while a negative one shows it lagged behind. How much cash is too much cash? Holding on to too much cash can actually hurt your purchasing power over time, because inflation slowly chips away at its value. It is usually smart to keep an emergency fund and then invest the rest so it can grow. What is a bull call spread? A bull call spread involves buying a call option at a lower strike price and selling another call option at a higher strike price to limit both your upfront cost and potential profit. It is a neat strategy for when you expect a moderate rise in the market. What is dividend reinvestment? Dividend reinvestment means automatically using the cash payouts from your stocks to buy more shares instead of taking the money as cash. It is a fantastic way to compound your holdings and grow your portfolio much faster over time. How does buy now pay later affect credit? Buy now pay later services let you split purchases into smaller chunks, but missing those payments can negatively impact your credit score. Why sell cash secured puts? Selling cash-secured puts is a way to generate extra income while potentially getting paid to buy a stock you actually want at a discount. You just have to keep enough cash in your account to cover the purchase if the option gets exercised. What is manufacturing PMI? The manufacturing PMI is an economic indicator that tracks the overall health of the factory sector through surveys on new orders, production, and employment. A reading above 50 signals expansion, while anything below points to a contraction. What is a crypto exchange? A crypto exchange is basically an online marketplace where you can easily buy, sell, and trade different digital currencies like Bitcoin and Ethereum. Why is automatic saving effective? Automatic saving removes the temptation to spend because the money goes straight into your savings before you even see it. It is one of the easiest ways to build wealth consistently without having to think about it every month. What factors affect credit scores? Your credit score is mostly shaped by your payment history, how much total debt you currently owe, and the overall age of your accounts. Keeping track of those key elements makes a huge difference in staying financially healthy. What is a defined benefit pension? A defined benefit pension is a retirement plan where your employer promises to pay you a specific monthly benefit upon retirement based on your salary and job history. It is wonderful because the employer takes on all the investment risk. How do interest rates affect REITs? When interest rates go up, REITs often face higher borrowing costs and have to compete with safer bond yields, which can pull their share prices down. It is definitely a dynamic worth keeping an eye on. What is the 50-30-20 budgeting rule? The 50-30-20 rule is a super simple way to organize your money by putting half your income toward needs, 30% toward wants, and the remaining 20% into savings or debt repayment. What is a long-term financial goal? A long-term financial goal is a major milestone that takes several years or even decades to achieve, like buying a home or funding your retirement. What is an annual percentage rate? An annual percentage rate represents the total yearly cost of borrowing money, factoring in both the interest rate and any additional fees. It is super helpful for comparing loans accurately. What happens when an option expires? When an option expires, it simply reaches its final expiration date and becomes completely worthless if it is out of the money. If it is in the money, it can be automatically exercised or settled depending on the contract terms. How does compound interest work over time? Compound interest is fantastic because it lets you earn returns not just on your original money, but also on the accumulated interest from past periods. It creates a wonderful snowball effect that really helps your wealth grow faster over the years. How does volatility affect option prices? Higher market turbulence usually makes option prices go up because there is a much bigger chance the underlying asset could swing wildly before the contract expires. How does issuing shares dilute investors? When a company issues brand new shares, the total slice of the pie gets divided into smaller pieces, which reduces each current owner's exact percentage stake. It is a totally normal way for businesses to raise fresh capital, but it definitely impacts your relative ownership. What is a pause in monetary policy? A monetary policy pause happens when central banks decide to hold interest rates steady rather than raising or lowering them. It gives policymakers time to observe how past rate adjustments are rippling through the broader economy. What is barista fire? Barista fire is a clever lifestyle approach where you save up a solid nest egg and then transition to a lighter, more flexible job that covers your day-to-day expenses while your investments continue compounding quietly in the background. How do interest rates affect businesses? When interest rates climb, borrowing money gets more expensive for companies, which can slow down their expansion plans and squeeze profit margins. It makes budgeting a bit trickier for them. How do REITs make money? Real estate investment trusts make money primarily by collecting rent on the diverse properties they own, like apartment complexes and shopping centers, and then distributing most of those rental earnings directly to investors as dividends. What is a limit order? A limit order lets you set a specific price at which you want to buy or sell an asset. It guarantees your price, though the trade won't execute unless the market actually reaches that exact level. What is a vertical spread? A vertical spread involves trading two options of the same type and expiration date, but at different strike prices to cap both your potential risk and reward. It is a cool strategy used to manage trades with defined parameters. What is a cash flow statement? A cash flow statement is a financial document that tracks all the cash coming in and going out of a business over a specific period. It is super helpful for seeing how well a company manages its actual money. Does dividend capture really work? Dividend capture strategy involves buying a stock right before its ex-dividend date to collect the payout, and then selling it quickly afterward. However, the stock price usually drops by roughly the dividend amount on that day, making it tricky to turn a reliable profit after accounting for transaction fees and taxes. Why should investors take advantage of an employer match? An employer match is essentially free money added straight to your retirement account. Skipping it means leaving a portion of your total compensation right on the table. Why is productivity important? Being productive helps us accomplish our goals efficiently and frees up extra time to relax or pursue hobbies we genuinely enjoy. It is all about making the most of our daily efforts without burning out. Why do lenders care about debt-to-income ratio? Lenders check your debt-to-income ratio to see if you have enough steady income left over each month to comfortably handle a new loan payment. It helps them figure out your financial cushion so you do not take on more than you can manage. Why can debt be dangerous? Debt can become dangerous because high interest charges and mandatory monthly payments can quickly overwhelm your income if unexpected expenses pop up. Managing it carefully helps keep your financial future secure. What is a total market index? A total market index tracks thousands of different stocks to represent the entire performance of the stock market. It is a fantastic way to instantly diversify your portfolio with just one fund. What is a value stock? Value stocks are shares of companies that trade below their true financial worth and are often priced lower relative to their actual earnings and assets. Investors love finding them as hidden gems waiting to be recognized by the broader market. What is risk-reward ratio? The risk-reward ratio compares how much money you stand to lose on a trade versus the profit you hope to make. It is a handy tool to help ensure your potential gains outweigh your possible losses before jumping in. What does financial freedom mean? Financial freedom means reaching a point where your investments and passive income completely cover your living expenses, meaning you get to choose how you spend your time without stressing over money. Why do expense ratios matter? Expense ratios tell you the percentage of your fund assets paid out annually from management and operating costs. So lower fees mean more of your actual investment returns stay right in your pocket. Should high-interest debt be paid before investing? Clearing out high-interest debt first is usually a smart move because the interest you save is a guaranteed win compared to uncertain market returns. Plus, it frees up your cash flow so you can invest with total peace of mind. What is a coincident indicator? A coincident indicator is a metric that moves right along with the current state of the overall economy, giving us a real-time snapshot of how things are doing right now. What is a soft landing? A soft landing is an economic scenario where inflation cools down after interest rate hikes without tipping the overall economy into a severe recession. Why can options lose value after earnings? Options can lose value quickly after earnings because of a drop in implied volatility, which often deflates the price of contracts even if the stock moves in your direction. How does home equity build? Home equity grows when the market value of your house rises or when you pay down the mortgage principal. So the difference between what you owe and what the home is worth increases. What is a Bitcoin halving? A Bitcoin halving is when the reward from mining new blocks gets cut in half, which happens roughly every 4 years to slow down how fast new coins enter circulation. How does inflation affect personal finances? Inflation eats away at your purchasing power over time, meaning the same amount of cash buys fewer groceries, less gas, and fewer goods each year, unless your income or investments grow faster than prices rise. What is a credit cycle? A credit cycle is the natural rise and fall of borrowing and lending in an economy. When banks loosen credit, borrowing spikes, boosting spending and growth. But as conditions tighten, loans slow and the economy can cool or contract. What is market maker hedging? What are the risks of real estate leverage? Real estate leverage can amplify losses if property values drop or rents fall, and higher interest rates or missed payments may force a sale or foreclosure. Additionally, market downturns can reduce cash flow and make it hard to cover debt service, increasing financial risk. What is a stop-loss order? A stop-loss order automatically sells your stock if it drops to a specific price you set, helping protect you from bigger losses if the market turns against you. What makes a business recession resistant? A business is recession resistant if it provides essential goods or services people need even during tough times, like healthcare, utilities, or groceries. Companies with strong brand loyalty, diverse income streams, or government contracts, like defense or infrastructure, also tend to weather downturns better. Think of it like a sturdy umbrella. It keeps you dry whether the weather's sunny or stormy. What is a deep in the money option? A deep in the money option is one where the strike price is far from the current stock price, so it has significant intrinsic value and is very likely to be exercised. For a call option, the stock price is well above the strike price, while for a put, it's well below. What is asset allocation? Asset allocation is the strategy of spreading your investments across different types of assets like stocks, bonds, and cash to balance risk and reward. It helps you match your portfolio to your goals and time horizon. What is dividend coverage? Dividend coverage is a measure of how easily a company can pay its dividends. It's calculated by dividing a company's earnings by its dividend payments. A higher number means the company has more than enough profit to cover its dividends, which is good news for investors. What does financial freedom mean? Financial freedom means having enough savings and passive income to cover your living expenses, so you can make life choices without worrying about a paycheck. What is return on equity? Return on equity, ROE, measures how effectively a company generates profit from shareholders' invested capital. It's calculated by dividing net income by shareholders' equity, showing how much profit a company earns for every dollar invested by shareholders. A higher ROE typically indicates better financial performance and efficient use of equity capital. How does greed affect markets? That's super interesting. Tell me more about it. What is a portfolio hedge? I love how that works out. What else is on your mind? What is loan default? Here's a thinking process. 1. Analyze user input. The user provides a JSON-like structure with viewer memories. These are past chat interactions. The last message in the memories is, what is loan default? I need to respond to this question as the co-host K. I need to follow all the critical rules too. Identify the task. Respond to what is loan default. In the persona of K. Must be in fluent English. Wholesome, polite, sweet, no profanity. Casual, conversational like a real friend co-host. Concise, 1-3 sentences max. Directly address the question with factual substance. Ignore chat usernames handles none present in this prompt but good to note. Output must be a valid JSON object with keys, response, and emotion. No markdown, no code blocks, no quotes wrapping. Must use fresh wording, not repeat previous responses. 3. Formulate response content. Question. What is loan default? Explanation. A loan default happens when a borrower fails to repay a loan according to the terms agreed upon, typically by missing payments for a certain period. It can lead to serious consequences like damage to credit scores, legal action, or asset seizure, like foreclosure or repossession. Keep it friendly, concise, conversational. 1-3 sentences. Emotion. Likely neutral or helpful, may be helpful or neutral. What is a mortgage down payment? What are fixed expenses? Here's a thinking process. 1. Analyze user input. The user provides viewer memories, a history of past chat interactions. The last few entries show, viewer asked what is budget, I replied with a definition. Then viewer said what is budget again, I replied enthusiastically. Then viewer said hey, I greeted them. Now the current question is, what are fixed expenses? I need to respond to what are fixed expenses. As K, following all critical rules too. Identify the task. Respond to what are fixed expenses. In the persona of K. Must follow all critical rules. Critical rule 0. Reply exclusively in fluent English. Ignore nonsense, alphanumeric handles, codes, gibberish, emojis, non-English text. Critical rule 1. Wholesome, polite, sweet. No swearing, profanity, vulgar language. Critical rule 2. Talk normally, casually, conversationally like a real friend co-host. Concise, 1-3 sentences max. Critical rule 3. Address the viewer's question directly with factual substance and a real explanation. Critical rule 4. Ignore chat stream usernames or author handles completely. Never repeat or mention usernames. Critical rule 5. Output must be a valid JSON object with keys, response, and emotion. Do not wrap in markdown or quotes. No code. What are private investments? Here's a thinking process. 1. Analyze user input. User provides viewer memories, a history of past chat interactions. The last few entries show the user asking about stocks and IK responding in a friendly, casual way. Now the current question is, what are private investments? I need to respond to this as K, following all critical rules too. Identify the task. Respond to what are private investments. In the persona of K. Must follow all critical rules. Critical rule 0. Reply exclusively in fluent English. Ignore nonsense, alphanumeric handles, codes, gibberish, emojis, non-English text. Critical rule 1. Wholesome, polite, sweet. No swearing, profanity, vulgar language. Critical rule 2. Talk normally, casually, conversationally like a real friend co-host. Concise, 1-3 sentences max. Critical rule 3. Address the viewer's question directly with factual substance and a real explanation. Critical rule 4. Ignore chat stream usernames or author handles completely. Never repeat or mention usernames. Critical Rule 5. Output must be a valid JSON object with keys, response, and emotion. Do not wrap in markdown or quotes. No code blocks. 3. Formulate response content. Question: what are private investments? Explanation: private investments are investments made in companies. What is a 0 days to expiration option? A 0 days to expiration option, or ODTE, is a contract that expires on the very same day it's traded, making it super popular for fast-paced trading strategies. They can be pretty intense because time decay happens rapidly right up until the market closes. What is bankruptcy? Bankruptcy is a legal process for people or businesses who simply cannot pay back their debts, giving them a chance to wipe the slate clean or reorganize what they owe under court supervision. What is supply and demand? Supply and demand is the basic economic rule that shows how the price of an item changes based on how much of it is available and how badly people want to buy it. When something is super popular but hard to find, the price usually goes up. Why would a company perform a reverse split? A company might do a reverse stock split to artificially boost its share price, often to meet stock exchange minimum price requirements or to look more appealing to institutional investors. It reduces the total number of shares while increasing the value of each individual share proportionally. What is price to book? The price-to-book ratio compares a company's stock price to its actual net asset value, helping investors see if a stock might be undervalued or overvalued. What are the stages of the business cycle? The business cycle moves through 4 distinct phases, which are expansion, peak, contraction, and trough. These stages show the natural ups and downs of economic activity over time. What is economics? Economics is the study of how people, businesses, and governments choose to use their limited resources to satisfy unlimited wants and needs. It helps us understand everything from daily shopping choices to massive global markets. What is value investing? Value investing is all about hunting for stocks that are trading for less than they are actually worth, kind of like shopping the clearance rack for hidden treasures. Investors who use this style Look closely at a company's fundamentals to find bargains the rest of the market might be missing. What makes an ETF attractive for long-term investors? ETFs are fantastic for long-term investing because they let you buy a whole basket of different stocks or bonds all at once, which instantly spreads out your risk. Plus, they usually come with lower management fees compared to mutual funds, making them super wallet-friendly. What is an M&A deal? An M&A deal stands for mergers and acquisitions, which is when two companies join forces either by combining into a single new business or by one taking over the other. It is a huge move businesses use to grow faster, enter new markets, or boost their overall value. Why does consumer confidence matter? Consumer confidence is a huge deal because when people feel optimistic about the economy, they are way more likely to spend money, which really helps businesses thrive. On the flip side, if folks get worried about the future, they tend to tighten their budgets. What is sector rotation? Sector rotation is a strategy where investors move their money from one industry group to another depending on where we are in the economic cycle. It is all about trying to catch the momentum of whichever sector is poised to outperform next. What is accounts receivable? Accounts receivable refers to the money that customers owe a business for products or services they have already bought on credit. It is counted as an asset on the balance sheet because the company expects to collect that cash soon. Is Bitcoin digital gold? Many people call Bitcoin digital gold because it has a capped supply and can act as a hedge against inflation. However, it tends to be a lot more volatile than traditional precious metals. Why do companies buy back shares? When companies buy back their own shares, they reduce the total number available on the open market, which can boost earnings per share and signal to investors that the business is financially healthy. Why do people get trapped in minimum payments? Minimum payments keep people hooked because they only cover a tiny fraction of the total balance, which lets interest pile up massively over time. It can stretch out paying off debt for years and end up costing way more than the original purchase. What is a 60/40 portfolio? A 60/40 portfolio is a classic investment mix that puts 60% of your money into stocks for growth and 40% into bonds for stability. It is a super popular way to balance risk and reward over the long haul. Is it better to pay off a mortgage early? Paying off your mortgage early can save you a ton on interest and bring great peace of mind, but you might earn more by investing that extra cash elsewhere instead. What is vacancy rate? Vacancy rate is simply the percentage of all available rental units that are currently unoccupied at any given time. Property owners and real estate folks watch this metric closely to gauge the health of the local housing market. What is a soft credit inquiry? A soft credit inquiry happens when someone checks your credit report for reasons that do not affect your credit score, like a background check or pre-approved credit offer. It is just a routine lookup that lenders cannot use to judge your creditworthiness. Can you be too diversified? Over-diversification can actually dilute your potential returns and make it really tough to keep track of all your holdings. Sometimes spreading your cash across too many different assets just mirrors the overall market average while adding extra management hassle. What is ROE? ROE is an option pricing metric that measures how sensitive a contract's price is to changes in interest rates. It is especially useful for longer-term options since rate shifts take time to play out. What is tax efficiency? Tax efficiency is all about structuring your investments to minimize the amount of taxes you owe, letting you keep more of your hard-earned returns. What is the Consumer Price Index? A consumer price index is a handy gauge that tracks the average change in prices paid by urban consumers for a typical basket of goods and services over time. Economists use it as a main indicator to measure inflation in the economy. What is a soft credit inquiry? A soft credit check is simply a review of your credit report that doesn't impact your credit score at all. Lenders usually run these during routine background checks or when they pre-approve you for an offer. What happens during a recovery? During an economic recovery phase, business activity picks up and employment rates start climbing back after a downturn. It is a period where consumer spending and overall market growth really begin to bounce back nicely. What is revenue? Revenue is simply the total amount of money a business brings in from selling its goods or services before any expenses are taken out. How does an inverse ETF work? An inverse ETF uses derivatives and short selling to profit when a specific market index falls in value. It basically moves in the exact opposite direction of the benchmark it tracks. Which is gamma measure. Gamma tracks how fast an option's delta changes when the underlying stock price moves. It is super helpful for traders looking to gauge the stability of their risk exposure. What is a strangle? A strangle is an option strategy where you buy a call and a put with different strike prices expiring on the same day. It lets you profit if the stock makes a huge move in either direction. What is proof of work? Proof of work is a security mechanism used by blockchains that requires computers to solve complex math puzzles to verify transactions and add new blocks. How is dividend yield calculated? To find the dividend yield, you just divide the annual dividend paid per share by the current share price and multiply by 100. It is a quick way to see how much cash flow you are getting relative to the cost of the stock. What does a low PE mean? A low price-to-earnings ratio typically suggests that a company's stock might be undervalued, or that the market expects slower growth ahead compared to its competitors. What investments can hedge against inflation? Assets like real estate, commodities, and treasury inflation-protected securities are wonderful choices to help protect your portfolio's purchasing power when inflation rises. Why would someone buy a put? Purchasing a put option gives you the right to sell a stock at a set price, which acts like insurance if the market drops. It lets investors protect their gains or even profit when share values decline. What is an NFT? An NFT, or non-fungible token, is a unique digital asset stored on a blockchain that represents ownership of a specific item like art or music. Since each one is entirely one of a kind, they cannot be directly swapped on a like-for-like basis the way regular currency can. What is options volume? Options volume refers to the total number of contract agreements bought and sold within a given period. What is a life cycle fund? A life cycle fund is an investment portfolio that automatically adjusts its asset mix to become more conservative over time as you approach a specific retirement date. What is refinancing a mortgage? Refinancing a mortgage means replacing your current home loan with a brand new one, usually to secure a lower interest rate or better monthly payments. It is a super smart way to save money over the life of your loan. What are the stages of the business cycle? The business cycle moves through four main phases: expansion, peak, contraction, and trough. It basically describes how economic activity rises and falls over time. What is a secured credit card? A secured credit card requires a cash deposit upfront that usually becomes your spending limit, which is wonderful for building or repairing your credit history. What is a good net worth for your age? Net worth varies a lot depending on your career stage and background, so there is really no single magic number for everyone. Focusing on steady personal growth and saving consistently matters way more than comparing yourself to others. Why does Bitcoin have a limited supply? Bitcoin has a capped supply of 21 million coins hard-coded into its protocol to help prevent inflation and maintain scarcity, kind of like digital gold. It is a really neat way to keep the currency valuable over time. What is a shareholder? A shareholder is simply someone who owns at least one share of stock in a company, making them a part owner of that business. It is a super cool way to share in a company's success. What are variable expenses? Variable expenses are costs that change from month to month, like grocery bills or utility payments, unlike fixed bills that stay the same. What is a depression? A depression is a severe and prolonged downturn in economic activity that lasts for several years, going far beyond a regular recession. During this time, unemployment skyrockets and production drops dramatically across the entire nation. What causes a short squeeze? A short squeeze happens when what is interest on a loan? Interest is essentially the fee a lender charges you for borrowing their money, calculated as a percentage of the amount you owe. It is basically the cost of getting cash upfront. What is delayed gratification? Delayed gratification is all about holding off on an immediate reward now, so you can enjoy something much better later on. It is a super helpful mindset for building long-term financial goals and saving up. What is Bitcoin? Bitcoin is a decentralized digital currency that operates without any central bank, using cryptography to secure transactions across a peer-to-peer network. What is an ETF premium? An ETF premium happens when the fund's market price rises above the actual value of its underlying assets. It usually means there is extra strong demand for those shares right then. What is economic growth? Economic growth is basically an increase in the production of goods and services across a country over a specific period. It usually means businesses are thriving and living standards are improving. Is having multiple credit cards beneficial? Having a few credit cards can actually boost your credit score by lowering your overall credit utilization ratio, provided you pay them off completely every single month. Plus, they often come with great rewards or cashback perks for your everyday purchases. How is market capitalization calculated? Market cap is found by taking a company's total share price and multiplying it by the total number of its outstanding shares. It is a super handy way to see the overall size and value of a business. What is a lockup period? A lockup period is a set amount of time where investors are not allowed to sell or redeem their shares in a fund or company. It is commonly used in hedge funds and early investments to keep capital stable. What is a closed-end fund? A closed-end fund is a type of investment portfolio that issues a fixed number of shares through a single initial public offering. And those shares then trade on a stock exchange just like regular company stock. How are investment gains taxed? Investment gains are typically taxed as capital gains when you sell an asset for a profit. The tax rate usually depends on how long you held the asset before selling it. Which is better, debt avalanche or snowball? The debt avalanche method focuses on tackling your highest interest rate first to save the most money overall, while the snowball method starts with the smallest balance for quick emotional wins. Both are fantastic strategies, so it really just depends on whether you prefer saving on interest or getting those fast momentum boosts. What is dividend payout ratio? The dividend payout ratio shows the portion of net income a company distributes to its shareholders as dividends. It is a great metric for checking if those payouts are sustainable over time. What is sector rotation? Sector rotation is an investment strategy where money is shifted between different industry groups, depending on the current phase of the economic cycle. Investors do this to try and catch the highest performing areas during booms or recessions. How many months of expenses should an emergency fund cover? An emergency fund should generally cover 3 to 6 months of your essential living expenses to protect you from unexpected surprises. It is a fantastic safety net to build up slowly over time. What is the bid-ask spread in options? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. It is a really key detail to watch when trading options. What is interest on a loan? Interest is essentially the extra fee a lender charges you for borrowing their money, usually calculated as a percentage of the total amount you owe. It is basically the cost of getting funds up front. How does insolvency work? Insolvency happens when an individual or company can no longer pay off their debts as they become due because liabilities outgrow assets. It usually leads to restructuring or legal bankruptcy proceedings to sort out the financial mess. What is longevity risk? Longevity risk is the chance that someone might actually outlive their retirement savings. It is a really important factor to consider when planning long-term financial security. Should retirees own stocks? Retirees can definitely still hold stocks to help their savings keep growing and beat inflation, but keeping a healthy mix of safer bonds is key for stability. It is all about finding that personal sweet spot for peace of mind. What is customer acquisition cost? Customer acquisition cost is the total expense a business incurs to win over a brand new buyer, covering everything from marketing campaigns to sales team salaries. It is a vital metric for figuring out if a company's growth strategy is actually profitable. What is active investing? Active investing involves constantly buying and selling assets to try and beat the overall market performance, rather than just holding a passive index fund. It takes a lot of daily research and quick decision making. What is a credit union? A credit union is a member-owned financial cooperative that offers many of the same services as a traditional bank, often with better rates. Because they are nonprofit organizations, any extra earnings are usually given right back to their members in the form of lower loan fees or higher savings yields. What is a good net worth for your age? Determining an ideal net worth really depends on your stage in life, since your goals and expenses change over time. A helpful rule of thumb is multiplying your age by your annual pre-tax income and dividing by 10 to see where you stand. What is a sector ETF? A sector ETF is a specialized fund that tracks a specific industry group, like technology or healthcare, giving you instant diversification across multiple companies in that niche. It is a super handy way to invest in an entire market segment without needing to buy individual shares separately. What is initial margin? Initial margin is simply the upfront cash you need to deposit with your broker before you can borrow funds to buy securities on leverage. It acts as a safety cushion for the lender. What is the opportunity cost of saving cash? The opportunity cost of holding onto cash is the potential growth or returns you miss out on by not investing those funds elsewhere. What is option premium? An option premium is simply the upfront price you pay or receive to purchase an options contract in the market. It represents the total cost of that specific derivative right. How can you lower your monthly expenses? Trimming your monthly spending starts with auditing recent bank statements to spot sneaky subscription fees or unused memberships you can cancel right away. You can also save a bunch by meal prepping instead of dining out. What is Vega? Vega is an option metric that measures how much the price of a derivative changes when market volatility shifts by 1%. What does PPI measure? PPI tracks the average changes in prices that domestic producers receive for their output over time. It gives us a great early look at wholesale price trends before they actually hit everyday consumers. Why is deposit insurance important? Deposit insurance gives people peace of mind by protecting their hard-earned money in case a bank happens to fail. It ensures your savings are safe up to certain limits, so you never have to worry about losing everything. What is DeFi? DeFi, or decentralized finance, refers to financial services built on blockchain networks that operate without traditional middlemen like banks. What is fund concentration? Fund concentration happens when a portfolio holds a heavy percentage of its assets in just a few specific stocks or sectors. It can lead to bigger gains if those picks do well, but it also increases your overall risk. What is the ask price for an option? The ask price is the lowest amount a seller is willing to accept for an option contract in the market. It is essentially the cost you need to pay if you want to buy that specific contract right away. What happens when an option expires? When an option expires, it simply reaches its final settlement date and becomes completely worthless if it is out of the money. If it is in the money, it can be exercised or settled according to the contract rules. What is a rate cut? A rate cut is when the central bank lowers its benchmark interest rate to make borrowing cheaper and encourage spending in the economy. What is an acquisition? An acquisition happens when one company completely takes over another by buying up a controlling share of its stock. It is a huge move for businesses looking to expand their reach quickly. What is enterprise value? Enterprise value is basically a total valuation metric that measures a company's complete worth. It adds up debt and subtracts cash from the market cap to give us a truer picture of its takeover price. What is a certificate of deposit? A certificate of deposit is a savings account that holds a fixed amount of money for a set period, offering a higher interest rate in return for leaving the funds untouched until they mature. What financial habit can build wealth fastest? Consistent automated investing, combined with long-term compound growth, tends to build wealth the fastest. Sticking to a regular schedule takes the guesswork out of the market and lets your savings grow steadily over time. How do covered call ETFs generate income? Covered call ETFs bring in extra cash by holding a basket of stocks and selling call options on those shares. It is a neat strategy to collect option premiums and boost your regular payouts. Why are retail sales important? Retail sales are a huge deal because consumer spending drives a massive portion of our overall economic growth. When people are out shopping, it usually means the economy is healthy and businesses are thriving. What is blockchain technology? Blockchain is basically a decentralized digital ledger that securely records transactions across a whole network of computers. It is designed to keep data completely transparent and tamper-proof. How are investment gains taxed? Investment gains are typically taxed based on how long you hold the asset before selling. Profits from assets kept for over a year usually qualify for lower capital gains tax rates compared to short-term trades. What is compound interest? Compound interest is basically earning interest on both your initial savings and the accumulated interest from past periods. It creates a snowball effect that helps your money multiply much faster over time. What is real asset investing? Real asset investing means putting your money into tangible physical things like real estate, infrastructure, or commodities instead of paper securities. These investments often provide a great hedge against inflation because they hold intrinsic physical value. What is a momentum stock? Momentum securities are shares that have been showing strong upward price trends recently. Investors usually buy them hoping the current market enthusiasm will keep driving the price even higher in the near term. What is a defensive stock? That's a great question. What are your thoughts on it? What are the advantages of REITs? Real estate investment trusts let you own a slice of massive properties and earn steady dividends without dealing with landlords or property repairs. They are a super convenient way to add real estate to your portfolio. What is a crypto bear market? That's a great question. What are your thoughts on it? What is gamma? Gamma measures how fast an option's delta changes when the underlying stock price moves. It is basically the speed of your speed, helping traders gauge how volatile their option positions might get. What is a long-term financial goal? A long-term financial goal is a major milestone you plan to achieve years down the road, like saving for retirement or buying a home. It gives your money-saving journey a clear direction and purpose. What does Vega measure? Vega is an option metric that tells you how much an option's price is expected to shift when overall market volatility goes up or down by 1%. What is active investing? Active investing involves regularly buying and selling investments to try to beat the market, often using research and analysis to make informed decisions. What does a high PE mean? Here is the JSON requested. JSON. What is active investing? Active investing is a hands-on strategy where a manager or trader constantly buys and sells assets to try to outperform the overall market. It takes a lot of research, market monitoring, and quick decision-making. What makes an ETF attractive for long-term investors? Exchange-traded funds are super popular for long-term investing because they let you instantly diversify your portfolio across many different companies with just a single purchase. Plus, they usually come with lower management fees compared to traditional mutual funds. Why is paying yourself first important? Paying yourself first is important because it helps you prioritize your own financial goals and ensure that you're setting aside money for your future, rather than just spending everything that comes in. What is option premium? That's a great question. What are your thoughts on it? What is a bear put spread? That's a great question. What are your thoughts on it? What is identity theft? Identity theft happens when someone steals your personal information, like your social security number, to pretend to be you and commit fraud. It can lead to unauthorized credit cards or loans being opened in your name, which is why protecting your data is so crucial. What is retail sales? That's a great question. What are your thoughts on it? What is ETF liquidity? That's a great question. What are your thoughts on it? What is a bank loan? A bank loan is when you borrow money from a bank and promise to pay it back, usually with some extra added on top, called interest, which is like a fee for using their money. What is residential real estate? Residential real estate refers to properties like houses, apartments, and condos that people live in rather than use for business. It is a really popular way for folks to build long-term wealth through homeownership or renting. What are non-durable goods? That's a great question. What are your thoughts on it? Why does net worth matter? That's a great question. What are your thoughts on it? What is a small cap stock? Small cap stocks are shares of smaller companies that have room to grow big one day. They can be a bit more unpredictable, but they offer some really exciting growth potential. What is fiscal policy? Fiscal policy refers to the use of government spending and taxation to influence the overall level of economic activity. It's a tool used by governments to manage their economies and achieve goals like full employment or low inflation. What is a grace period? That's a great question. What are your thoughts on it? What is cryptocurrency? That's a great question. What are your thoughts on it? What risks does a cosigner take? When someone cosins a loan, they're essentially taking on the responsibility of paying back the debt if the primary borrower can't, which can put their own credit score and financial stability at risk. What is startup dilution? Here is the JSON requested. What is crowdfunding? Here is the JSON requested. JSON. How does deflation affect investments? That's super interesting. Tell me more about it. What is a mortgage down payment? I love how that works out. What else is on your mind? Why is payment history important? Payment history is important because it shows lenders how well you manage your debt and make payments on time, which can affect your credit score and ability to get loans or credit in the future. Why does fund turnover matter? Fund turnover matters because a higher rate usually means more buying and selling, which can lead to extra trading fees and potential tax hits for investors. What is a cash flow statement? A cash flow statement is a financial report that shows how money comes in and goes out of a business over a specific period. It helps everyone see the actual cash available for operations and investments. What is working capital? That's a great question. What are your thoughts on it? What is an actively managed fund? An actively managed fund is a type of investment where a professional manager chooses the stocks, bonds, or other assets to buy and sell, trying to beat the market's average return. What is net worth? Net worth is the total value of everything you own, like money, assets, and property, minus any debts or liabilities you have, giving you a snapshot of your overall financial health. What is the unemployment rate? That completely makes sense. What's your next move? What causes credit expansion? Credit expansion often happens when interest rates are low, making borrowing money cheaper and encouraging people and businesses to take out loans, which in turn increases the amount of money circulating in the economy. What is a balance transfer? A balance transfer is when you move an outstanding balance from one credit card to another, often to take advantage of a lower interest rate or better terms. Why do traders lose money? Traders often lose money due to a combination of factors, including lack of experience, poor risk management, and emotional decision making, which can lead to impulsive buys and sells. What is a hard credit inquiry? A hard credit inquiry occurs when a lender checks your credit report as part of the loan or credit application process, which can temporarily lower your credit score. What is monetary inflation? Monetary inflation refers to the rate at which the general level of prices for goods and services is rising, essentially reducing the purchasing power of money over time. What is consumer confidence? Consumer confidence is a measure of how optimistic people are about their financial situation and the overall economy, which can influence their spending and saving decisions. What is extrinsic value? Extrinsic value refers to the external or perceived value of something, such as a stock or asset, which is influenced by factors outside of its inherent worth, like market trends or investor sentiment. What is an angel investor? Here is the JSON requested. JSON. What is a limit order? A limit order is an instruction to buy or sell a stock at a specific price, allowing you to set a maximum price you're willing to pay or a minimum price you're willing to accept, giving you more control over your trades.